Good morning, friends. This is CA Mithun Reddy, the faculty for Law and GST at all the levels. Now, I am going to discuss about cmainter IDT paper, especially IDT paper, question paper analysis and important topics discussion. So let's start with the question paper discussion. Ma total question paper consists of 8 questions. How many questions? 8 questions. In that, question number 1 is compulsory. Rest of 7 questions, write any 5. So 15 MCQs into 2, 30 marks. So question number 1 compulsory. Rest of 7 questions, write any 5. Question number 1, especially MCQs. Sir, all students are aware of it. 15 MCQs, each of 2 marks, that is 30 marks. But while in the MCQs, only 6 MCQs from directtax. How many, sir? 6 MCQs from directtax. 6 into 2, 12 marks. That too, question number 1 to question number 6, directtax. Question number 7 to question number 15, 9 into 2, 18 marks. So, in MCQs, 15 MCQs, 6 from the direct tax and 9 from indirect taxation. 9 from indirect taxation. Now, question number 2 to question number 8. Question number 2 to question number 8. 7, you need to write how many questions? 5 questions. Question 2, question 3, question 4, question 5 directly from direct tax. The direct tax faculty will explain regarding to that. Indirect tax is question number 6, question number 7, question number 8. Sir, question number 6 directly theory. A part, B part, total theory question. Total theory question. That to introduction of GST in India. You can see the total chapter consists of 8 questions. So 99% out of that 8 questions, these are 6th question part A, part B to be asked. Question number 7A, composition, registration, levy. Out of the 3 chapters they will ask. Question number 7B, time, value of supply. Okay. Question number 8A, customs valuation 90%. Sorry. Question number 8A, ITC mostly. Question number 8B, customs valuation 90%. If in some cases they are asking anti-dumping duty. My suggestion is in the preparation MCQs, CMA released the, my suggestion, CMA released the MCQ questions. MCQ questions, yes, prepare that. And even I am going to conduct a MCQ session regarding CMA indirect taxation questions. Then prepare question number 6 theory directly. Question number 8 in that customs valuation. If you prepare ITC chapter, then that is enough. So in today's class, we are uploading question number 6 theory chapter, question number 8B valuation chapter. Yes, in the next session, I am going to upload MCQ and ITC. MCQ and ITC. Those who are targeting for 30 in indirect taxation, they can easily get 30. In what way, sir? Even In the MCQs, 18 marks are there. 18 marks. If you prepare the CMA booklet MCQs, you are able to write minimum of 7 questions. Minimum of 7 questions. 7 into 2, 14. Now, yes, theory question number 6, you can get a 12 easily. And question number 8, customs valuation, you can easily, yes, able to write. Then you need to apply more concentration on ITC. Here 12, yes, 24, 38 marks. Easily 30 marks is very easy by going selective topics. 6A theory, now 8B customs and 8A ITC. Sir, how can we rely your words, sir? By going selected topics easily it can get 60. I will show some question papers and model papers so that you can rely me. What I said? Question paper total 8 questions. Question number 1 MCQ compulsory. As I said, up to 6 DT. 7 to 15 indirect taxation. 7 to 15 indirect taxation. Then question number 2, 3, 4, 5 direct taxation. We will see from question number 6. Question number 6, as I said, theory topic. That too GST introduction in India. Difference between direct and indirect taxation. Key benefits of GST. Key benefits of GST. Okay. Question number, yes, 7. They given, I think, aggregate turnover. 7B. 7B. It is a time of supply. As I said, 7A composition registration levy. 7B time or value of supply. Now 8A ITC. 8B customs valuation. 8A ITC. 8B customs valuation. Again, we'll go to some other set. What I said? Question number 1 is compulsory. Rest of 7 questions write any 5. First 6 questions directly from direct tax. Indirect tax is 7 to 15 indirect taxation. Then question 2, 3, 4, 5 direct taxation. Question number 6, as I said, theory. Discuss the difficulties in pre-GST regime in the context of indirect taxes. Next, members of GST Council and recommendations of GST Council. 7A, they asked the composition scheme. 7B, value of supply. What I said? 7A, composition, levy, registration. 7B, time of supply, value of supply. 8A, as I said, ITC mostly given. 8B, valuation. Again, we'll go to question papers. This is December 2024 question paper. First 6 questions DT. First 6 questions DT. From 7 to 15. From 7 to 15. It is what, sir? GST, which means indirect taxation. Question 2, 3, 4, 5. DT. Then question 6, A, B, theory topics. Explain the concept and features of indirect taxation. Members of GST Council. 7. They given aggregate turnover regarding, which means composition or registration. 7B. Here customs. GST valuation. GST valuation. 8A. They given ITC. 8B. Again. That's it. So, with that, you can easily get 60 even by going selective topics. All the best. So, what I said, question 6, GST introduction in India, theory topic, totally 6A, 6B. Yes, 7A, composition, registration, levy. 7B, time of supply, value of supply. 8A, ITC. 8B, customs valuation. Yes, within the short time, yes, if you want to get 30 means, first go with the MCQs that ICA released, CMA Institute released a booklet. Yes, then 6th question, 8th question. If there is a possibility, go for 7. If not, read 6th and 8th. So in the present class, I am going to upload customs valuation and 6th question theory. Next, one ITC chapter and MCQs. I will upload some other class. So with the 2 days preparation itself or 1 day preparation itself, you can easily get 30 in indirect taxation. All the best, ma. And it's my advice. This is only for the people, yes, who are, yes, fearing about the examination. My advice, read 100%. But when there is a time bound, then go for a, yes, planned preparation. Bye. Okay, good evening friends. Today we are going to see the concept, theory concept in the GST, introduction to the GST. Mostly which will plays very important role. This chapter, even a small chapter, 14 marks chance for examination. The first, we are going to see the difference between direct tax and direct tax. Direct tax and indirect taxes. Listen, sir. Direct tax. Assessee will pay the tax directly to the government. Person paying the tax to the government directly. Person who, yes, who earning the income will pay the tax directly to the government. Either he did the PGBP or capital gains or income from other sources, house property, salary. Directly, assessee required to pay the tax. What is an assessment? Determination of liability to pay the tax. So in direct tax, assessee directly bears the burden and pay tax directly to the government. Now come to the indirect tax. Sir, we will not pay the tax to the government directly. In GST, mostly all are forward charge by leaving some as a reverse charge. In forward charge, will pay the tax supplier by collecting the same from recipient, which means recipient required to pay the tax to the supplier, not to the government. Let me explain. If I purchase a mobile phone from Bajaj Electronics, if I purchase a mobile phone from, yes, the mobile phone is 1 lakh, the tax rate 18%, 18,000. I required to pay 1 lakh 18,000 to whom? Bajaj Electronics. As you know, Bajaj Electronics will hold 1 lakh and pay 18,000 to the government, which means person paying the tax to the government. Who will pay the tax to the government in the GST? Supplier collects the same from ultimate consumer, which means recipient. Thus the tax shifted to other person. Okay. Now Samsung manufactured a mobile phone and given the same to Bajaj Electronics. They will pay the tax, collect the same from Bajaj Electronics. From the Bajaj Electronics, I purchase the mobile phone. They will transfer the tax to me. Indirect tax. Yes, person will pay tax directly to the government. In indirect tax, will pay the same to the supplier, and supplier will pay tax to the government. The incident of tax has been shifted from one person to another person. Now, direct tax is progressive in nature, means the direct tax slab rates are different based on the income. Yes, up to 5 lakhs, 12 lakhs, more than 12 lakhs, like that. Even the tax slabs are 10%, 12%, 15%, 20%, 30%, 40%. Whoever earning more income, they require to pay more tax. They're in direct tax, but in GST, either rich person purchase or a poor person purchase, even a beggar purchase a mobile phone, the tax rate is or no. If I purchase a watch, either me purchase or Mukesh Ambani purchase or Madhulika purchase, the tax rates are same. But direct tax, it is progressive in nature. Who have an ability to pay the tax, they are required to pay more tax. Higher rate of taxes for the people having higher ability to. But in indirect tax, all consumers bear the burden equally, irrespective of ability to. Let us take biryani 5% tax rate. Whether beggar purchase or a rich person purchased or a poor person purchased or a yes middle class man purchase, the tax rate is same, which means it is regressive in nature. Direct tax is progressive in nature. Higher ability person will pay higher rate of tax. Indirect tax is what? Regressive in nature. All should bear the burden equally. Direct tax, there is a chance of tax evasion to show lower income. But in indirect tax, yes, it is hardly impossible. Why? MRP inclusive of all the tax. Whatever the good you purchase, which inclusive of taxes or not, whether it is shirt or a pant or a biscuit packet or a mobile phone or a laptop, whatever it may be, MRP, the price inclusive of value plus. Now, burden of direct tax, burden of tax by the borne by the person himself. In indirect tax, it is shifted to sir, another person. Any doubts? Once again, direct tax, assessee will pay tax directly to the government. Here in indirect tax, supplier will pay the tax by collecting the same from recipient. The incidence of tax shifted to other person. Direct tax is progressive in nature. Whoever getting more revenue, more income, they required to pay higher taxes. But indirect tax is regressive in nature. All consumers bear equal burden, irrespective of ability. Indirect tax, tax evasion is possible. In indirect tax, it is not hardly impossible. Why? Because it is included in the burden of tax borne by the person himself. Yeah, but he are being shifted to another person. Shifted to what, sir? Another person. Okay. Major direct and indirect taxes. As you know, indirect tax under the control of CBIC, Central Board of Indirect Tax and Customs. Direct tax is in the control of CBDT. It is Central Board of Direct Taxes. Direct taxes now mostly on GST customs. Direct taxes are what, sir? GST and customs. Now, direct tax is only income tax. Income Tax Act 1961. Origin of taxes. Anna, in India, who is the highest authority? You say, in India, who is the highest authority? Constitution of India is the highest authority. Now listen, sir. Yes, Article 265 said, no tax levied or collected without the authority of, no tax to be collected without the authority of law, unless constitution permits no tax to be levied. For example, local rowdies, Surya Bai tax, local tax, yes, other tax, Ganesh Puja tax, no tax to be levied unless it is permitted by law, which means unless the constitution permits no tax to be. Article 246 distribute the power, yes, between center and state. I given later also. Center, parliament, state, legislature. We'll discuss it. Origin of taxes. None of taxes are union list, state list, concurrent list. Sir, union is correct word or central is correct word, sir? Union, I already said Indian Union. Why? Because, yes, after independence, yes, princely states combined into India. That is the reason we called union budget, union home minister, union finance minister, like that. Listen, sir, now. Union list take care by central government. Those are railways. In railways, central government. Defense, either army, navy, air force. As I said, for army, who is the head? General. For navy, admiral. For air force, marshal. Now there is a higher post than these three work combinedly. Yes, of defense staff. Even I said the salutes also. Army, navy, air force. Why? Because flight will, yes, move in this direction. It will fly in this direction. Okay. Railways, defense, customs. The control. Customs means import and export of, okay, under the union list. Now state list. Police. Sir, listen, sir. Listen. Now if it is TSP, Telangana State Police, only they will work in a, if on the shoulder TSPS is there, Telangana State Police Service, they are the group's officer. They have no authority to work in other state. Then IPS, they are appointed by President of India, signature by the President of India. IPS, the state IPS officer can be suspended, or yes, we will attach the person to a reserve bench, but we have no authority to dismiss. Is appointed by President of India. Here police, state police means TSPS, Telangana State Police Service, and Telangana State Police. That's it. Betting, gambling centers. Why? Because in some states betting prohibited, some states allowed. Agriculture, state agriculture, state Now concurrent list, both to be taken care. Education, yes, for intermediate state board is there, CBSE board is there. Yes or no? Center, state, both. Even up to 10th class also, state syllabus, central syllabus. Now this is for knowledge. Now this is very important. Next topic, very important. Concept and principle of GST. Concept and principle of, listen, sir. GST based on value added. Now let me, yes, I am dealing with tree. Now I sold a tree for rupees 1 lakh and the GST rate 5% to a timber merchant. Yes, he cut and make into timber and sold for 1.5 lakh. Yes, carpenter, wood. The carpenter convert into wood and sold. Now some other person makes into furniture and sold to a mall. The mall person buy painting, labeling, and they are selling. Yes, person, agriculturist sold for 1 lakh, timber merchant 1.5 lakhs. After converting timber into wood, they sold for 2.5 lakhs. Furniture 3.5 lakhs. In the mall, they are selling for 5 lakhs. Every incidence tax to be collected or not? It is based on value addition. Based on what, sir? Now, GST is a destination based tax. At last, it will be borne by ultimate consumer only. If I purchase that sofa, which made with the tree, and I keep in my house, I need to bear the burden of ultimate. It's a destination based tax, which means technically paid by supplier, actually borne by consumers. Which means supplier will pay the tax but collected the same from recipient. GST collected at multiple stage, production, distribution, but we're allowed to claim as a, okay, now I'm a carpenter. I purchase 1 ton of wood by spending 10 lakhs and I make into furniture sold for 25 lakhs. Yes or no? I paid the input tax on 10 lakhs. Now listen. I'm a carpenter. I purchase the wood from a timber merchant, 10 lakhs, just 12%, 1.2 lakhs, and I made into furniture, sold the same to the customers for 25 lakhs, the GST 12%. How much it is, sir? How much it is, sir? Lakhs. But I can claim 1.2 lakhs as ITC or not? Yes, the burden is only 1.8 lakhs. See, GST collected on multiple stages, production, distribution, but tax paid on inputs allowed set off against the output tax. While paying the output tax, we are allowed to claim the input tax. Now, GST is a tax paid on consumption of products from business sources, not on personal or hobby activities. Okay, it is my hobby to sing songs. I'm a bathroom singer. GST be collected on me. I'm a professional singer who, yes, I'm singing a songs for a film directors, music composers, and all. Yes or no? It's my hobby to provide teaching to the persons. No GST. If I started an education institution, tutorials, and providing coaching to the students, now GST to be paid or not? Under GST, ITC provided through a value chain. Every, yes, a person will claim the ITC. In the inward supply, he should be a recipient. In the outward supply, he must be a supplier. N number chances they can claim the, is the concept and the principle of GST. Device, please. Third, constitutional provisions. As I said, I will explain it later. I will explain. Article 246. Article 246. Given a power to the parliament and legislature to make the laws. In Telugu, the accurate word is there for assembly and parliament, Chatta Sabha, in which that are making the laws. Yes, framing the acts. Yes or no? Now, parliament will make the central act. In what way? A bill to be passed in Lok Sabha. After passing in Lok Sabha, it comes to Rajya Sabha. Who is the higher authority? Rajya Sabha. They are intellectuals. Yes. Then after passing in Lok Sabha and Rajya Sabha, it comes to President of India for 6. This is the central act. State act. First to be passed in Legislative Assembly. After that, it comes to Legislative Council. After that, it is signed by Governor. So, Article 246 of Constitution given the power to the Parliament and Legislature to frame the laws, which means acts. Is Article 246? Article 246 given the power to the Parliament and legislature to frame the laws. Parliament means central act. Bill to be passed in. Bill to be passed in Lok Sabha. After that, Rajya Sabha. After that, it comes to President of India. Legislature. First, a bill to be passed in. Bill to be passed in. Bill to be okay. Bill to be passed in Assembly. After that, Council. Then comes to Governor for signature. Once again, Article 246 given a power to Parliament and Legislature to frame the acts. Parliament framing, which we call it as a Central Act. Legislature, which framing is called State Act. Parliament. Bill to be passed in Lok Sabha. After that, Rajya Sabha comes to President of India. Legislature first, Assembly thereafter, Council. After that comes to Governor for signature. There is Article 246. Next. Article 246A. Given the power to levy taxes on intrastate supply. Levy the power to taxes on what? Intrastate supply. You know, on intrastate supply, what to be levied, sir? Directly CGST plus SGST. Don't go beyond CGST plus. CGST levied by central government. SGST levied by state government. That's it. Article 246 given the power to the parliament and legislature to frame the acts. Article 246A, yes, given the power to the central and state government to levy taxes on intrastate supply. On intrastate supply, what to be levied, sir? CGST by central government, SGST by state government. Article 269A. Yes, given the power to levy tax on interstate supply. On interstate supply, what to be levied, sir? IGST. Levied by whom? Central government. But after levying, it is apportioned. Listen, sir. There is a discussion. CGST, SGST. CGST directly central, SGST directly state. If it is IGST, you know, it goes to the central government. After it goes to the central government, it is Niti Ayog. Earlier it is 14th Finance Commission. Now it is Niti Ayog. Distribute the revenue of center to the center and states. From that around 40 to 42% again it comes to state. CGST, SGST directly apportioned already. If it is IGST, it goes to the central government. Once it goes to the central government, it has been apportioned to the states. That is the reason political parties in the states should maintain a peace and harmony, yes, with the central government. That is the reason Narendra Modi always saying double engines car, which means center and state, if same party is there, the transfer of funds will be proper. Now, Article 279A, GST Council. Sir, GST Council empowered to make recommendations to central government. They just have a power to recommend, but they don't have any decision. Who has a power to recommend? GST Council. But GST Council is headed by Union Finance Minister. Any doubt, sir? Now you say CGST, central government, SGST, state government, UTGST, you say CGST, CGST, SGST, state government, CGST central, SGST state, UTGST, union territory. Yes, IGST, central and state. Why? Because it goes to the central. After goes to the central, it is apportioned to the state. Now, sources of GST law. You know, in GST, 35 laws are there. But very easy. Listen. I'll explain with a practicality. Starting day, I said tax means act, rules, regulations, notifications, circulars. We'll come to the act. Acts are listen, IGST, DGST, IGST, DGST, SGST, UTGST, compensation cess. Sir, listen, sir. IGST only one. Listen. TGST only one. UTGST only one. Compensation cess only one. Any doubts? IGST one act, TGST one act, UTGST one act, compensation cess one act. Now SGST. How many states in India? 28 states. Then 28 SGST acts are. Now 3 union territories with the state legislature. As I said, union territory with the state legislature also. Yes, SGST applicable. How many are there? 3. Delhi, Puducherry, Jammu Kashmir. Togetherly, yes, that is 31. Total 30. If anybody said, I know GST perfect, now you need to ask how many GST acts out. It's not that much tough, man. So tax means IGST, TGST, SGST, UTGST, compensation says IGST, 1 TGST, 1 UTGST, 1 compensation says 1. Yes, UTGST without state legislature all are under the control of Lieutenant Governor. But SGST, how many states in India? 28, which means 28 SGST acts. Union territories with state legislatures are 3 togetherly. Total, that's it. Now see, sir, TGST Act 1, yes, UTGST Act 1, IGST Act 1, Compensation Cess Act 1, then come to SGST, 28 states plus 3 union territories with the state legislature. With state legislature, Delhi, Puducherry, Jammu Kashmir. Total how many? Circulars and notifications issued by CBIC. Sir, you said notification issued by central government. Notification is a date specified by central government when it is applicable. But the notification is CBIC but issued by central government. It specifies the applicability date. Every notification is just a date. Circulars anyways given by CBIC. Finance Act, which means budget. So any doubts, sir? This is constitutional provisions. You say once again. Article 246 given a power to Parliament and legislature to frame the laws. Parliament means central act passed in Lok Sabha, after that Rajya Sabha, after that comes to the President of India for signature. Legislature, Assembly, Council, Governor signature. Article 246A, yes, power to levy tax on intrastate supplies. Union intrastate supplies, CGST plus SGST, CGST levied by central, SGST levied by state. Article 269A, yes, Article 269A, power to levy tax on interstate supplies. Interstate supply, IGST by central government, after that apportioned. Article 279A, yes, GST council appointed, recommend central government in the decision making process. They have no power to take a decisions directly. Now you say CGST central government, SGST state government, UTGST union territories, IGST by central or state. Why? It is apportioned to the state by the decision of Niti Aayog. How many GST laws? 35. IGST 1, UTGST 1, CGST 1, compensation says 1. When come to SGST, 28 state plus 3 union territories with state legislature. Those are Delhi, Puducherry, Jammu Kashmir. Prepare. Okay. Need of GST. Listen. Remove cascading effect. Earlier, tax on tax is there. Tax on tax. Sir, in what way, sir? If goods manufactured, excise duty. Again, if the goods are being transferred to some other state, CST, Central Sales Tax. No, there is no such a problem. There is no tax on tax. Remove blockage of credit chain. Earlier, yes, service tax is there, excise is there, VAT is there. If we, yes, take a inward supply in the excise, we can claim SENVAT credit. But that SENVAT credit can be used only in the excise, not in the service. Not in the, yes, service. Blockage of credit chain. Yes, yes, SENVAT credit under excise not be allowed to claim under service tax earlier. But in GST, we can claim only one GST is there. Now, multiple taxes on a single transaction. There are multiple levels of taxes. There are no such a level of tax. To removing double transaction both on goods or services. Earlier goods one tax, service one tax. Now both are GST only. Industry choice of locating factories, warehouses heavily influenced. Why? Because earlier based on a state, they will take a different type of decisions. Under GST, all are should be considered equally. Now India will be developed equally rather than all the factories and industries there in one state. To curb all these, which means to solve all these problems, GST was introduced with a system of idea: one nation, one tax. One nation, one tax. Any doubt, sir? Now, benefits of GST. Listen. Benefits of GST. Creation of unified national market. Common taxes. Rates are common for all. There is no specialized rates. All are equally. Yes, earlier 5, 12, 18, 28. Now they make into 2, which is 5 and 18 by removing mostly 12 and 28. Boost to make in India initiative, which means boost means which will beneficial to increase the Indian manufacturing. Yes, Indian products more competitive in the national international markets. Even earlier, India mostly dependent on Russia and Israel for defense equipments. Now you know India now selling the defense equipments, BrahMos missile and other, yes, gun shells for mission guns. India is always thinking about make in India initiative. Even for we are thinking to manufacture Sukhoi 57. Even Russia asked, we will purchase your Sukhoi 57 if it is made in India. Now they are coming and they are making in India and giving to us. Boost to investment and employment. With the GST, exports will increase, investment will increase, results increase in GDP and employment. GDP means gross domestic product. No cascading effect. Yes, there is no state boundaries. If you see, while before GST, a state border having a checking for all the buses, vehicles regarding any goods are transporting, they want to collect the tax. Now one nation, one tax. There is no borderline now between the states. Improved competitiveness. If transaction costs are reduced, eventually, yes, competitiveness and the trade and industry will be developed. One company will compete with other company. One business will compete with other business. Single transparent tax. One nation, one tax. No hidden taxes. No hidden. Earlier, if you go to a restaurant, first, yes, sales tax, then service tax, sales tax, service tax, after that service charge again. No, that is requirement, only GST. Lower tax burden. Yes, if government revenue leakage has been reduced, now government is getting more benefits. If government getting more benefits, they try to reduce the taxes. That what happened in the GST 2.0 recently. Earlier TV taxes is 28. They make into 18. Why? If there is no leakage, all are getting proper. Whatever the revenue that they are expecting, they are getting. Which means they will try to decrease the tax rate. These are the benefits of GST. The taxes subsumed into GST, which means on GST introduction, what taxes has been mixed, subsumed into GST. Listen, excise duty, earlier living on manufacture, subsumed into GST. CVD, countervailing duty, on customs, even excise, subsumed into GST. Service tax on services, subsumed into GST. Central sales tax on interstate supply of goods, earlier, now subsumed into GST. VAT, intrastate supply of goods, now subsumed into GST. Entertainment tax is entry to the theaters or pubs or circus. Octroi or entry taxes, luxury taxes on luxury items. These are all subsumed into one GST. XI, VAT, GST, service tax, CVD, entertainment tax, entry tax, all are being subsumed into GST. But some are not being subsumed into GST. Why? Because even excise, VAT, GST subsumed, but not totally subsumed. For some items, even now also, excise, VAT, GST is there. As you know that products, alcoholic liquor for human consumption, petroleum crude, motor spirit, high-speed diesel, aviation turbine fuel, natural gas, which means 9(1) and 9(2). What is 9(1)? Applicability. GST applicable on all inter and intrastate supplies except alcoholic liquor for human consumption. Yes, alcoholic spirit for making of alcohol. Extra neutral alcoholic or refined spirit used in the manufacturing of alcoholic liquor for human consumption. Directly you can say alcoholic liquor for human consumption. A spirit which to be used in the manufacturing of alcoholic liquor. GST not applicable. Why GST not applicable means, you know, highest rate prescribed in the Act is 40. Highest rate at present imposing is 28 before GST 2.0. But if you bring into GST, beer will comes by 50 rupees. But you know, what is the beer rate now in the market of Hyderabad? Around 150. Okay. Now, again, motor spirit, petroleum crude. Petroleum crude is not a petrol, it is a raw material for petrol, sir. What is a petrol? Motor spirit is the petrol. Petroleum crude, diesel, natural gas, aviation turbine fuel, sir. But there is a difference, sir. Two are permanently excluded. Never come under GST. Never ever. Never ever. No chance. What are they? Alcoholic liquor for human consumption, alcoholic spirit, which means extra neutral alcohol spirit for making of or manufacturing of alcohol. Permanently, which means permanently excluded, never come under GST. But these come under GST if a GST council recommended, central government considers. What? 9(2). That is the reason 9(1) I given applicability, except 9(2) non-applicability. Some chances they will bring to GST also. Petroleum crude, motor spirit, high-speed diesel, aviation turbine fuel, natural gas. But again, I said tobacco and drugs, opium and drugs, both GST and excise levied. Both GST and excise levied, but VAT CST not levied. Except all these, only GST levied. Now you say, what subsumed into GST? Excise earlier on manufacture, service on service tax, VAT on intrastate supply of goods, CST on interstate supply of goods, luxury taxes on luxury items, octroi entry taxes, countervailing duty on excise and also earlier on customs subsumed into GST. Now, some are permanently excluded in GST. Alcoholic liquor for human consumption, extra neutral alcoholic refined spirit, which is a raw material for alcoholic liquor for human consumption, permanently excluded. Temporarily excluded is petroleum crude, motor spirit, high speed diesel, aviation to burn fuel, natural gas. Tobacco products, hemp, narcotic and other drugs, both GST and excise. GST Council. Sir, why GST Council? As I said, to recommend the central government in that decision making. But the decision is with whom? Now, GST, even India is a federal structure, both central and state has a power to levy and collect the taxes. To avoid the dispute between central and state, a common body required, that is a GST Council. GST Council is being constituted by President of India. Who constituted? But power given by Article 279A. We discussed Article 246, Article 246A, Article 269A, Article 279A. GST Council is constituted by President of India. That President of India power given by Constitution. Why? A common body required between a center and state to avoid the disputes between the center and state. GST Council. The GST Council has been constituted by whom, sir? President of India. Who formed GST Council? Who given a power? Article 279A. Why? To avoid the dispute between center and state, a common body required. Okay. Who there in the GST Council? Listen, sir. Here many are writing a wrong answer. As you know, first very easy, all knows. Union Finance Minister act as a chairperson. Now you say, who is the Union Finance Minister? Nirmala Sitharaman. Okay. Who is the Union Home Minister? Amit Shah. But listen, one thing you should know. A state cabinet, all ministers of state, including CM called as state cabinet. All ministers, including PM called as central cabinet. In a state, only cabinet minister is there. But in central, cabinet minister and assistant cabinet minister also there. That person which called as Union Finance Minister, Union State Finance Minister, we call it as Union. Yes, I'll show. Who is the Union Finance Minister? Nirmala Sitharaman. Yes, now see who he is. Sri Pankaj Chaudhary. He is the Minister of State of Finance in India. He was a held position and works under Union Finance Minister. It is the Union Finance Minister for the ministry. But an assistant who works there, which we called as Union, yes, the State Finance Minister. And even you see, who is the Union Home Minister? Amit Shah. I'll see. Pandit Sanjay. Who is Bandi Sanjay? Union Minister. Union. Yes, sir. Here it is. Union Minister of. Listen. There it is. See. Minister of State of Home Affairs. Union Minister of State of Home Affairs. In state, only cabinet rank is there. But in central, yes, cabinet rank minister. Yes, assistant minister also will be there. Now, as we discussed, who is the head of GST Council, sir? Union Finance Minister. Who is now? Nirmala Sitharaman. Then, Union State Finance Minister as member, Pankaj Chaudhary. Now, finance ministers of state. Finance ministers of some states, CM will hold the post. Even Telangana, there is no home minister. Revant Reddy itself, CM take caring the power. So in some states, there is no finance minister. CM is holding the post with him. Then they will nominate some other person. All state finance ministers act as member. If any state who not appoint a finance minister, they will nominate some other person. Now you say, Union Finance Minister act as chairperson. Union State Finance Minister act as member. Yes, finance ministers of each state act as a member. If not available, nominated minister. Any doubt, sir? What GST Council will do? They will recommend the central government. What they are going to do, sir? But the decision making power with whom? Central government only. See, what recommendations? What tax rates to be applied? On goods, what tax rate? And one service, what tax rate? What goods to be exempted? What service to be exempted? And taxes needs to be subsumed into GST. Bring petrol in the GST, bring diesel in the GST. They will recommend. Yes, when does the above 5 petroleum products brought into GST, they are recommend. Special category status recommended by GST Council. Even AP also fighting for special category status. It will not be fruitful, I think. Determining the threshold limits of registration, either for normal or composition. You know, now normal 20, 10, 20, 40. Yes, composition 1.5 crores, 75 lakhs. Below they have an option. These threshold limits also recommended by GST Council. Decision taken care by and other decisions. So GST Council no power to take a decision. They will just recommend the central government. Procedural aspects. Many times they asked about GST Council. I give an in-depth. Procedural aspects of GST Council. Sir, what is quorum meaning? Minimum number of persons required to transact a meeting. I said Sunday there is an extra class. Some students are no sir. I said 4 students enough to start the class. For me, 4 students enough to start the class, which means called as a quorum. So in a GST Council meeting to be start, only 1/2 of the persons to present. How many, sir? That's it. 1/2 of total members of GST Council shall make the quorum. 1/2 of total members of GST Council shall make the quorum. Okay. But here the decision prevailed with 3/4 of votes. 3/4 of, not the total. 3/4 of persons present and voting. So every decision of GST Council taken by 3/4 of weightage votes present and voting. Central government weightage is 1/3 usually. Rest 3/4 is states. Central government weightage 1/3. States weightage is 3/4. CG, SG. CG 1/4, SG 3/4. But decision supported by 3/4 of members present and voting. Okay. No act or proceedings invalid if any member fails to attend. Okay. Madhulika fails to invite me for her marriage. Her marriage completed. Now I'm asking, you fails to yes, invite me na. Do marriage again, I will come. Do marriage again. Is it possible? No, like that. Any vacancy or a defect in the constitution of GST Council will not invalidate the decision, yes, or a proceedings of GST Council. Defect in appointment also invalidate. Procedural illegality will not invalidate. Before the chairman takes the position, yes, if any member taken the chair, usual chair, the procedure after chairman taking a seat, members need to sit. Yes, which means the GST Council meeting is invalid. The decision is invalid. No. Is the quorum in the GST Council, sir? What is the quorum in the GST Council? 1/2 of the total members. Decision taken by, consider decision done. 3/4 of members present and voting. Out of the total vote, central having 1/3. Okay, so state having 2/3. Sorry, 1/3 total. But in the decision, 3/4 majority required. No act or proceedings of GST Council invalid by vacancy or defect in the constitution of GST Council, defect in the appointment of member, any procedural irregularity. Very, very, very important. GST Council. Now listen once again. GST Council formed to recommend the central government to take a decision. But GST is a federal structure. Both central and state involvement is there. To avoid the dispute between central and state, a common body needs to be required. That common body is a GST Council constituted by President of India. Who given the power to President of India to constitute GST Council? Article 279A. Article, yeah. Composition of GST Council. Union Finance Minister act as chairperson. Who is Union Finance Minister? Nirmala Sitharaman garu. Yes, Union State Finance Minister Pankaj Chaudhary garu. Finance Minister of each states. If there is no Finance Minister, if some state Chief Minister holding the post, then nominated minister from the state. Okay. GST Council will do what? Recommend the central government tax matters, exemption matters, taxes to be subsumed, special category status, fixing the threshold limits for registration and other decisions. Here procedural aspects. 1/2 of total members considered as quorum. Decision considered taken 3/4 of majority present and voting. Central government having 1/3 of votes and state government having 2/3 of votes. Yes, it will not be invalid if any vacancy or a procedural defect or a defect in the appointment, that meeting and activity of GST Council not be invalid. No act. Device, sir. GSTN. Goods Service Tax Network. Commonly we can use it as common portal. Goods Service Tax Network. Usually, what is the usual word? Common portal. Now listen, sir. GSTN is a non-profit government-owned organization, a special purpose vehicle. It's non-profit. That network is not for profit. It's a non-profit government-owned organization, a special purpose vehicle. What are the functions of GSTN? Functions are, listen, facilitating registration. If we want to take a GST registration, you need to apply to the GSTN portal only. Registration taken only through GST portal. Now, we can file the returns, either R1, R2, R3, whatever the returns it may be, either to the central or state, only source through GST portal. Now, completion and settlement of IGST. How IGST to be settled? As I said, IGST collected by center. After that, it is apportioned to the states through the GST network only. Matching concept, which means GST R1 of supplier The same should shown in the GSTR 2A. The ITC same to be shown in GSTR 2B. The same claimed in the GSTR 3B. This all to be matched. If my office purchase a laptop from Bajaj Electronics, the GSTIN of Bajaj Electronics, the GSTIN of my laptop to be matched. Now they will file GSTR1. It should be displayed in GSTR 2A for me. Eligible ITC shown in GSTR 2B, I can claim in GSTR 3B. Yes, banking network. So, as I already said, tax payment to be done in two ledgers, credit ledger, cash ledger. How money to be added, sir, in cash ledger? Net banking, debit credit cards, RTGS, NEFT, UPI, IMPS, mostly online system only na. Various reports to the central and state government. Yes, with the GSTN, they can know how much of interstate supply done in India, how much of intrastate supply, how much of the exemptions. They can get an idea with the reports. Analysis of taxpayers profile. Once we enter GSTIN of Ramesh, it will show the picture of Ramesh when he taken a registration. How much of ITC claimed, how much of outward supply he made, out of the outward supply, how much is the taxable, and what is the exempted. Full analysis, full information regarding registered person available in the GST portal. Running of matching engine for reversal, and this is the GSTIN. Okay, see how many questions are there. First, difference between direct and indirect taxation. Origin mostly they won't ask. Concept and principle of GST. 2. Constitutional provisions if the paper is tough. The paper is tough or it comes in the MCQ. Need of GST, that is deficiency. Benefits of GST as of now 4. Taxes subsumed in the GST. Yes, GST Council 6. GST Network 10. Even you can take constitutional provisions also, it is 8. As I said, out of these 8, 2 questions are guaranteed. Now I will show some question papers for getting more confidence. You see, direct and indirect taxation, the paper June 2024. As I said, 6th question directly from theory. Check any 6th question, any paper. Difficulties in pre-GST review, which means deficiency before GST. Next, chart notes on GST network. Done. We'll show some other papers. Now, it is June 2025. Now, see, directly 6th question. That is the reason I'm asking you to prepare much direct and indirect taxes difference. 7 difference are you given only 4. That in that you can divide progressive, yes, regressive. Then higher person, higher income will pay higher tax. You can segregate like that. I given in combined points. Now GST Council and recommendations of GST Council. Done. I will go by another paper. June 2024. Sixth question, limitations, short notes on GST net. Whatever. Now come to December 2022. See this paper. What it is? December 23. Sixth question. Any sixth question. Concept and features of indirect taxes. Benefits of GST to the central and state government. The benefits of GST. Enough. Okay. We'll go by model papers. We'll see. Whatever paper, sir. Same. We'll see 2-3 papers. This is set number 1, this attempt. Sixth question, concept of indirect taxes, GSTN. All the same. Again, set 2. I see 10 papers, man. Difference between direct and indirect taxes. Here they changed for the first time. Even it is very easy. Composite and mixed supply. You know, 2 or more supplies. Which one is a principal supply, which are naturally bundled? That composite supply has tax, principal supply tax rate, mixed supply has tax rate. But don't expect 100% it will come from first chapter only. Then we'll go by June 2025 model papers. What features? The benefits only, sir, the same, all combinedly I given. Whatever the concept they asked, you are capable to write like that I given. Sixth one, direct and indirect taxes, key benefits. Again, they will ask in a different way. That is the reason I given specifically. Now see this paper also. See any paper, difficulties, members of GST Council, 5 recommendations. You got a clarity? 8 questions, 14 marks. Then always 8B, it is custom 7. Print to print, I will take care. 2 classes is enough. ITC 8A. Yeah, we'll solve this question. Even some feeling tough na. BA Private Limited purchase a machinery which worth 10 lakhs, which paid and availed ITC, sold the machinery 18.6, second hand sale of goods. Directly you can say GST on transaction value 8 lakhs into 18%, ITC minus 5% per quarter or part thereof. 10 lakhs into 18%, 1,80,000 minus 5% into number of quarters, whichever is higher. 7 marks problem. If you learn only ITC valuation, this end of task, out of 70 in GST, you already got there, here 14, there 12, 26, 7 MCQ questions, at least 5, 36, more than enough to get the exemption. So wind up the class for today. We'll meet tomorrow. Bye. Okay. Good morning, friends. Today we are going to see the topic valuation. Valuation done on import and export of goods. On import, import duty to be paid by the importer on the goods. On export, export duty paid and get as a refund. So in GST, tax to be levied on value, but on the customs, duty levied on assessable value. Duty levied on what, sir? Assess means to calculate. Sir, assessable value, we required to pay the duty. Now, the valuation is the rules. 2000, customs valuation rules 2000, and it is amended in the year 2017 also. Okay. Now, there are around 13 rules, but mostly rule number 3 is 90%. Rule number 1, applicability. Rule number 2, definitions. Rule number 1 is what, sir? Rule number 2 is, sir, definitions. Now see, listen. Rule number 1, applicability. Rule number 2, definitions. Now rule number 3, transaction value. There we require to find assessable value. Yes, to determine the assessable value, FOB, CFOB, CIF, assessable value. Sir, FOB means free on board. FOB means what, sir? On board. Okay, we imported a machinery from Germany. We imported a machinery from Germany. Now, what is FOB? What is FOB? Cost of the machinery at the factory of exporter. If we are importing from Germany, we are the importer. For us, Germany is the exporter. So duty to be paid by importer on the goods. So see in the view case of importer. For us, Germany is a exporter. Very good. Then Germany factory near machinery cost. Cost of the mission at the factory of exporter. Germany factory to Germany port transportation charges. Those are carriage, freight, whatever it may be, transportation charges. Now, loading charges at the shipping port in the exporting country. Yes, Germany port to ship loading charges. These three are FOB. In an easy way, Germany factory near machinery cost, Germany factory to Germany port transportation charges, Germany port to Germany ship loading charges, togetherly called as FOB. What is FOB? Free on board. Now see, first, value of material X factory price in a neat way called as cost of the mission at the factory of exporting country. Let's take an example. We imported from France. Now first, cost of the machinery at France, at near France factory. Cost of the machinery at the factory of exporting country. Carriage freight insurance, which means transportation charges up to the port of shipment in the exporting country. France factory to France port transportation charges. Then France port to ship there in the ship there in that port loading charges, togetherly called as FOB. What is FOB? Free on board. What, sir? Free on board. You say, Udbhav, what is free on board? Take an example and explain. Okay, some other example. If we are importing a machinery from Japan, Japan factory near machinery cost, Japan factory to Japan factory to Japan port transportation charges, Japan port to a ship loading charges, togetherly FOB. Now, yes, if the following added, yes, now customs FOB will come. FOB, if you add something, yes, you can get customs FOB or FOB value as per customs. What we require to add? Listen, sir, first. Engineering, design, development charges, plans, sketches, outside India. Where needs to be done, sir? Outside India. Engineering, design, development charges, plans, sketches, outside India. You need to be add this. Any doubts? Engineering, design, development charges, plans, sketches, outside India. Then, yes, commission and brokerage. Commission and brokerage, except buying commission. Listen. Except buying commission. So first, what is a agent commission, what is a buying commission, we'll see. Okay, I want to import a mission from Russia. I want to import a mission from Russia, but I don't know the Russian language. There, yes, Rajesh staying in Russia from long back 10 years. He know Russian language. Yes, he know the area properly. Now I contact Rajesh asking that I want to purchase a missionary from Russia. I don't know where the missionary is available. I don't know where the missionary is available and I don't know the language. Arrange the missionary, establish a contact with the supplier. Now he taken me to the supplier and establish a contact between that supplier and me. Okay, the missionary price is 1 crore. Missionary price is what, sir? I paid 1 crore to the Russian supplier. Now Russian supplier will give 1% commission to the agent who brought the customer to him. How much? Which means 1 lakh rupees. That is agent commission. Agent also called as intermediary. In your common language, broker. Okay. Now, second time. Second time, for my branch, I require the missionary. Is I required an agent now? I know where the missionary is available and I have the supplier number and details. I directly go to the person and I ask the missionary. They said, you already know about the missionary, sir. Last time you purchased for 1 crore. Again you are asking, yes sir, I know I given 1 crore. But what you did? You given 1 lakh to your agent. How much you get? How much you got lost? 99 lakhs only. Now this time I contacted you directly, na? Yes, give me that 1 lakh to me. Give me that 1 lakh to me as a buying commission. Buyer. They are giving commission to the buyer itself, not to the middleman. Earlier, agent commission. Now, buying commission. I directly go to the Russian factory and I ask the person, yes, for missionary, they said 1 crore. I said, yes, I will pay 1 crore. But last time you given 1 lakh to whom? Agent. Yes, agent who bring the customer to you. This time you not required to pay any money to the agent. I comes to you directly. Then pay that 1 lakh to me directly. Who asking here? Agent or buyer? That is buying commission. If agent commission is there, that to be added. Yes, if buying commission is there, not to be added. What to be added, what not to be added, sir? Commission brokerage, that is agent commission added. What not to be added? Buying commission. Any doubts? Now, royalty and license fees. Royalty and license fees. Okay. Yes. Now India is trying to import Sukhoi 57 fighter jets from Russia. Along with that, yes, we asked some jets as an import. After that, you required to transfer the technology to India. You need to manufacture here only. Manufacture? But we consider as import only. But they need to manufacture here as a Make in India concept. Now, royalty, license fees. Royalty, license fees. They will transfer the technology. They will arrange some other company to work as a partner. They will make the fighter jets and they will sell to us. Royalty, license fees is to be included. Next. So, engineering, design, development charges, plans, sketches. If outside India to be added, in India not to be added. Commission brokerage added, if buying commission not to be added. Royalty, license fees to be added. Now, packing cost. What's a packing cost? Wait, except durable or returnable packing. Okay. Durable. What is durable? The packing which used for many times, which means more than one time. Gas cylinder is used for one time or for many times refilling. Gas to be packed in the gas cylinder only, hero. That gas cylinder is a one time usage or many times usage? Many time usage. Even for you youth people, summer season, you used to consume beer, some people. Now, beer bottle is a one time usage or multi usage? Multi usage, it not for once. They used to clean it. Even some people who are drinking the beers, consuming the beers, once they don't have any money, they will sell all the empty bottles. Again, they will purchase one beer with that. So, that is durable. Durable means more than one time usage. Returnable packing. This is the underground underground cable well. We imported the, yes, a cable, but they will send along with the wheel. Wheel is too costly, it's a big wheel. Yes, without the wheel, we cannot use that cable. Once underground cabling done, we need to return the empty cable. After using, this is the empty cable, you need to return it. You need to return back. So packing cost to be added. What to be added? Packing cost. What not to be added? Durable packing, returnable packing. Durable packing means packing used for more than one time. Returnable packing means once after we using the product, whatever the packing they given, we are returning back. So durable, returnable packing. Durable, returnable packing should not be added. Now, value of material. Value of material supplied by the buyer. Free of cost. Value of material supplied by the buyer free of cost. Now listen, sir. Vaishnavi is a renowned model in India, extreme model girl. Now, yes, I am a designer. I am a designer residing in France. I am a designer residing in France. She is a model. Now, for a concert, she asked me to design a dress. Yes, which is like, yes, peacock imitation. Now I made the dress. At last, she said, all dress is okay, sir, but down the lining you should make with original peacock feathers, sir. I said, it's not available with me. You do one thing, send it from India to me. I will, yes, arrange the peacock feathers as a border for your dress. Even they are selling at the roadsides, even the tribal locations, the peacock feathers. Now she sent the feathers. I have been interpreted the same in the dress, and I sent the dress to her. Now these peacock feathers she is going to give free of cost or not? Provided if it is interpreted in the dress, the value of dress to be increased or decreased. That is the reason that to be added. So engineering, design, development charges, plans, sketches outside India to be added. Commission and brokerage except buying commission. Buying commission not to be added. Agent commission to be added. Royalties, license fees added. Packing cost added, but durable returnable packing not to be added. Value of material supplied by the buyer free of cost to be added. If there, we need to add. If we add these to the FOB, we got customs FOB or FOB value as per customs. If nothing is there, FOB is equal to CFOB. If 2 is there, add 2. If 5 is there, add 5. Nothing is there, FOB is equal to CFOB. What is a CFOB? Customs FOB. Okay, first, to get the accessible value, what required first? FOB. Now, for FOB, add this. What, sir? Commission broker is added, but what not to be added? Buying commission not to be added. Packing cost to be added. What not to be added? Durable, returnable packing. Durable means usability more than one time. Returnable packing, after using the product or importing the product, the packing we are exporting it again. Now, engineering, design, development, plans, even you can use the word design also. In some design plan they consider separate, some they are both are same, they will consider. Engineering, design, development charges, plans, sketches. Where, sir? Outside India. If done in India, not to be added. Royalties, license fees to be added. Now, value of material supplied by the buyer free of cost. This one is a waste. Value of subsequent resale. Value of? Okay. First we imported a product from Japan. We want to sell to the Chinese person. Subsequent resale, we incurred some expenses, that also to be added. 99.99%. It should not be asked yet. Waste point. Just see and leave. So, if you add all these to the FOB, you will get customs FOB or FOB value as per customs. Both are same, sir. Customs FOB or FOB value as per customs. Easy way we used to do like this. CFOB. Both are same. CFOB means customs FOB or FOB value as per customs. Now listen. Sir, for CFOB, freight insurance to be added. Listen. For CFOB, sir, first we got what, sir? FOB done. We added, we got CFOB. Then if you add these to the CFOB, we will get CIF. Yes, cost, insurance, freight. CIF is the assessable value. Listen. There is a confusion here. CFOB, you know, customs FOB. If you add, what you need to add, sir? Freight, insurance. Then, if there a topic, wait, we'll discuss it later. Some photos needed, so some images need to be shown. CFOB, if you add freight and insurance, if you add what, sir? Freight and insurance, you will get CIF. CIF means cost, insurance, freight. Cost, insurance, freight. After that, wait. Landing charges is there earlier, not now, sir. Landing charges. Then you will get assessable value. But Wipro company filed a case law. Wipro company filed a case in Supreme Court. How can we do import without touching Indian land? For that, you are asking to pay charges of 1%. Is it is fair or not? They filed a case regarding, yes, these landing charges in the Supreme Court, and Supreme Court supported Wipro company and they removed the landing charges. Now that is the reason CIF is equal to assessable value. Mostly this to be asked in the interviews for final students. Why CIF assessable value same? If both are same, then what is the requirement of two names? So FOB, add CFOB, add CIF, CIF add assessable value earlier. Now Wipro, yes, through Wipro case law, landing charges has been removed. Now CIF is equal to assessable value. Sir, CFOB what to be added? Freight insurance. Freight insurance. Now listen, sir. Freights are of three types. Listen, very, very important. Freight are of three types. Factory is in, exporter factory is in Russia. Importer factory is in Vijayawada. The freights are of three. First, FOB, foreign factory to foreign port. Foreign factory to foreign port, covered in the FOB. Then, foreign port to Indian port, Vizag. Vizag. Here it is. No. CIF. CFOB added. CIF. Now, Indian port to Indian factory not included. Why? Because already import done. Import duty levied on what? Assessable value. Already import done. Okay. Here freights are of three. Foreign factory to foreign port. Foreign factory to foreign port, covered under FOB. Foreign port to Indian port, covered under CIF. Yes, Indian port to Indian factory not be included. Now, this freight is what freights are? Foreign port to Indian port, CIF freight. What freights are? CIF freight. Listen. Sir, freight. Now very important, listen. Freight. Sir, you know, generally we use mostly sea route, air route. Sea route, air route. Sea route, air route, listen. Sea route, air route. You know, sea route, we use vessel or ship. Air route, aircraft. Any doubts? Okay. Now, sea route. Ascertainable, which means they given in the problem and we know what the freight is. Ascertainable, not ascertainable. Sir, listen. If through sea route, ascertainable, actual basis. Freight is what, sir? Actual basis. If in the question they given a freight, it has $3,000. Consider that. Consider that. If it is given, take as it is. Ascertainable, actual basis. Not ascertainable. Now see. Now see. Not ascertainable, 20% of CFOB. If ascertainable, actual basis. Not ascertainable, what, sir? 20% of CFOB. Then, air route. Very, very important. If air given, the problem is somehow depth. If nothing mentioned, what route, sir? Sea route only. Why? Very cheap, dead cheap. What is the cheapest mode of transport? Means sea route. Very cheap. So mostly if nothing given, what route we use the most? Yes. Air means then apply more concentration. Ascertainable issue starts. Actual basis, 20% of CFOB, whichever is lower. But generally in the ICI material they given like this. Air freight should not exceed 20% of CFOB. What they given? Air freight should not exceed how much, sir? Than this one is easy. Yes, what they given, take and calculate 20% of CFOB, whichever is lower. The problem never become a mistake. Rather than using these, use this one. Actual basis, 20% of CFOB, whichever is lower. Sir, not ascertainable. 20% of CFOB. Not ascertainable, how much, sir? 20% of CFOB. Listen. Freight, ascertainable, not ascertainable. Sea route, air route. First, if nothing mentioned, what route? Sea route. Ascertainable, actual basis. If they given in the problem, not ascertainable, actual base, 20% of CFOB. Yes, sir. Air route, ascertainable, actual basis, 20% of CFOB, whichever is lower. Not ascertainable, 20% of CFOB. Then, insurance. We need to add freight and insurance for CFOB to get the CIF. Ascertainable, not ascertainable. Ascertainable, listen, actual basis. What, sir? Actual basis. Not ascertainable, 1.125% of CFOB. 1.125% of CFOB. Any doubt, sir? Now see. FOB, if you add, you will get CFOB or FOB value as per customs. Then you need to add what, sir? Freight, insurance. Listen first. Freight, insurance. Yes, freight. I given more clarity down. See, freight. You see freight mostly two routes, sea route, air route. Sea route, air route. Sea, ship or vessel, air, aircraft. Sea route, ascertainable, which means if they given in the problem, take actual basis. Not ascertainable, 20% of CFOB. Ascertainable, actual basis. Not ascertainable, 20% of CFOB. Air route, ascertainable, actual basis, 20% of CFOB, whichever is lower. Not ascertainable, 20% of CFOB. Any doubts, sir? Any doubts? Okay. That what? If not specified, then 20% of FOB value as per customs. In case of air, max 20%. For that I given clarity. Now insurance. Ascertainable, actual basis. Not ascertainable, 1.125% of CFOB. 1 point? Very good. Now listen. This is ship demurrage charges, light race, barge charges. What is ship demurrage charges, light race charges, barge charges? Yes, we'll see in the notes why I given some clarity over there. So we got CIF. Now CIF is equal to assessable value. Why? No landing charges. Which case la? Wipro case. Earlier landing charges 1% is there. So CIF plus 1% landing charges is equal to assessable value. Now landing charges removed, then CIF is equal to assessable value. So rule number 3, transaction value. So custom's duty levied on assessable value. How to find the assessable value? FOB, CFOB, CIF, CIF is equal to assessable value. FOB. Yes, foreign factory near machinery cost. Foreign factory to foreign port transportation. Foreign, yes, foreign port to ship loading togetherly, yes, called as FOB. If there in the problem, add these to get the CFOB or FOB value as per customs. What are they? First, engineering, design, development charges, plans outside India. Commission and brokerage except buying commission, royalties, license fees, packing cost except durable and returnable packing, value of material supplied by the buyer, free of cost. Now value of subsequent resale if payable to a foreign supplier. That is not required. Okay. Now we'll start with the rules. What is rule number 1, sir? Applicability. Rule number 2, definitions. Rule number 3, transaction value. Okay. When transaction value applicable? See, sir. In GST we seen 15.1 transaction value applicable when supplier and recipient not related. Price is the sole consideration. Okay. Here also the same first. Supplier and recipient not related means buyer and seller, exporter and importer, nothing but. Here buyer and seller is what? Exporter and importer. Not related. Price is sole consideration for supply. The same there for customs balance. Price to be paid or payable. Price to be paid or payable when sold for export to India, which means Russia, for Russia they are exporting, we are importing. They are exporting to India, which means they are sending from Russia to other country. For them export, for us that's it. For delivery at the time and place of importation, which means only these 2 points are important. Supplier and recipient related, price is the sole consideration. Anyway, you know. So, rule number 3, we covered assessable value. Even explanation required now. Now see, sir, explanation. Place of importation means customs station, where goods are brought for being cleared for home consumption or removed, deposit in a warehouse. Customs station we covered in the definitions. Customs area, customs port, customs airport. Okay. Unloading charges, landing charges not be considered. This only the Wipro case. Landing charges removed. That is the reason CAF is equal to assessable value. Now, buying commission means fees paid by an imported. Fees paid by an imported to his agent for the services representing him abroad in the purchase of goods being valued. What I am saying directly, buying commission not includable, agent commission is includable. Okay, this is not that much clear. Now, when ship is not brought to a jetty because of deep drought at port, ports are busy. Okay, this is a light race, bargage charges. Wait, I need to cover light race, bargage, demurrage charges. I need to cover. Wait. Now, the following costs are not to be included. What are they? Duties, taxes in India not to be includable. Duties, taxes in India not to be includable. Cost of erection charges in India. Cost of erection charges in India. Erection means installation charges. Installation done before import or after import? After import, not to be added. Transportation charges from Indian port to Indian factory not to be included. As I said, freights are of 3. foreign port to foreign factory to foreign port, FOB, foreign port to Indian port, CFOB, which means not CFOB in exact, CIF. We add to CFOB, we'll get CIF. Okay, Indian port to Indian factory, not includable. The following costs are what, sir? Not included. Now, development charges, yes, in India, not includable. Demurrage charges, wait, these demurrage I need to add. Yes, vendor inspection charges, what charges, sir? Vendor inspection charges, this is. Vendor inspection charges, not includable. Okay, now see, we require to cover what is demurrage, what is light race, what is bar gauge. Listen, sir, now. Okay, demurrage charges. What charges, sir? Demurrage charges. Now, what is a demurrage at the time of import? What is a demurrage at the time of export? First, demurrage. Mumbai, from Germany to Mumbai, yes, vessel reached. Vessel reached. Yes, what we are going to do? What we are going to do? We'll take a empty cargo container. Yes or no? Which means cargo lorry. Empty or full? Empty. Take to the port. Take to the port. Yes, at the port they will give a entry and they will give a time also. You need to come out the port. Yes, yes, from loading into your carrier. Yes, they will ask some charges. For example, if a empty lorry entered into the port, they will give 1 or 2 hours of time. Maybe 1 hour, 2 hours, 3 hours based on the scenario. You need to load it and come out of the port. Yes, for that you need to pay some charges, demurrage charges, letting the container lorry, yes, into the port. That is what? Demurrage. Yes, they given a time of 3 hours, but you taken 5 hours. They asked extra money. That is not includable. Usual money, includable. Yes. Now for export, first what we are going to do export? We will take a load lorry into the port. We'll take a load lorry. After that, from that lorry we will unload the same into the ship. There also you need entry and you need to, yes, use the port area for some time. That period is called demurrage, for the charges to be levied. If you take an extra time, if they paid money, if they ask money for delay in payment of charges, that is not includable. Any doubts? Demurrage charges. Now, light race charges. Listen, what charges, sir? Light race charges. We covered demurrage. Yes, if delay not to be includable, if not delay it to be includable. Above, ship demurrage charges, light race, bar gauge includable. If it is imposed due to delay in clearing the goods, not to be added. Not to be added. Listen, sir. Okay. Now light race is, Mumbai port is a big port or small port? Very big port. Vizag port is a small port or big port? Big port only. Why? Vizag port is a big port, ma. Then what about Machilipatnam port? Small. There is no that much of place to, yes, to bring big ships, and even they are not maintaining a water level. Water level. Yes, so For big ships, water level to be maintained. If not, it is struck. It is struck into the, yes, under soil or sand. So water level to be maintained. So that is the reason Mumbai port, they are maintaining a Vizag port, they are maintaining some water levels for what? Big ships. Okay. If there is no such a place in the Machilipatnam port and there is no arrangement, what they are going to do? They will stop. They will stop. Yes, 10 or 15 kilometers before the port. Now, from Machilipatnam, they used to go by taking small ships or boats. They used to unload from the big ship to the small ship, yes, in the ocean or a sea, and they will bring the same to the port. Okay, now big ship, the goods weight is 1 lakh tons. How many tons? 1 lakh tons. Yes, now from Machilipatnam, yes, why Machilipatnam? I said there is no such a place for a big ship and they are not maintaining a water levels. Okay, they will take a small ship from Machilipatnam, go to the, yes, big ship which is parked, outer anchorage. They use an anchor. They used to stop near by port of 10 or 15 kilometers around. Now the weight of big ship is how much? 1 lakh tons. The goods. They will bring a small ship or boat to whom? Yes, to the big port captain. They will allow and you will unload the 5,000 tons in one small ship. Yes, 10,000 tons in another small ship and brought to the port. Now what is the weight of the big ship now in regarding goods? 85,000 tons. Light rage. It has been lighted by unloading, but not in the port. But not in the port. That is what charges? Light race charges. What charges are? Now see here. When ship is not brought to the jetty because of deep drought, there is no such a level of water at port or ports. Are ports busy? Even Mumbai port sometimes full busy, like our railway station. Secunderabad railway station, when it is too busy, what they are going to do? They will stop the train, yes, nearby railway station for 1 hour or 15 minutes or 2 hours until it has been passed away. Here like that also, if ports are busy or even port is not busy, but they are not maintaining water levels. There is no such a deep drought. If there is no deep drought, what will happen? The big ship is struck due to the sand or soil under the waters. In this case, cargo discharged at anchorage, charges for bringing the goods from outer anchorage to jetty is called barging or light race charges. Okay, is to be added or to be not to be added? Added. In case of delay charges, they impose not to be added. You got it, sir? Now, exchange rate. Why exchange rate needed? Why exchange rate needed? We are importing from foreign country. We need to settle it in the foreign currency and we know the value. Yes, to convert into the Indian currency. So exchange value needed, which means exchange rate needed. What is the exchange rate? See, sir, exchange rate of CBIC. Exchange rate decided by CBIC. If only one rate is there, CBIC rate. Now, generally, interbank rate, RBI rate, CBIC rate is there. What to be considered? Interbank rate, see. Interbank rate, RBI rate, CBIC rate. What to be considered, sir? CBIC rate. If two CBIC rates given, bill of entry, entry inwards. What is the bill of entry? Showing the document, importer showing the document to the proper officer that goods are, yes, coming from outside country to India. Entry inwards means Yes, they entered and we want to get our goods back. Okay. Now, more than one exchange of CBIC. Now, exchange rate of CBIC at the time of bill of entry. Exchange rate of CBIC at the time of bill of entry to consider. Now, you say bill of entry. Bill of entry 21st October 2025. Entry inwards. Yes, 19th October 2025. Bill of entry 21st October 2025. Entry inwards. Yes, 19th October 2025. CBIC rates. $1 is equal to 80 rupees. $1 is equal to 83 rupees. What to be considered, sir? Exchange rate notified by CBIC at the time of bill of entry. Then $1 is equal to how much? $1 is equal to how much? 80 rupees. Now, listen. Generally, whatever they given, consider the CBIC rate. If more than one CBIC rate is there, bill of entry date, CBIC rate to be considered. Bill of entry date, CBIC rate to be considered. Now, any doubt, sir? We covered as of now what is a assessable value. First, after considering assessable value problems, after that we will solve a customs duty problems. So, what is an assessable value once again? Assessable value, how to calculate? FOB, CFOB, CIF, CAF, assessable value. Listen fast. FOB. Yes, cost of the factory at the cost of the mission at the factory of exporting country. Transportation charges up to the port of shipment. Loading charges at the shipping port in the exporting country. If it is from Germany, Germany factory near machinery cost. Germany factory to Germany port transportation. Germany port to ship loading charges togetherly FOB. If the following is there, add, you'll get CFOB. If nothing is there, FOB is equal to CFOB. If only some items are there, yes, add. What are they? Engineering, design, development charges, plan sketches outside India. Royalties, license fees. Commission and brokerage except. Commission and brokerage except buying commission. Very good. Yes, packing cost except durable and returnable packing. Okay. Value of material supplied by buyer free of cost. One is there which is useless. Yes, value paid to the foreign supplier for subsequent sale. Now, CFOB, if you add freight insurance, you will get CAF. Yes, not all times ship demurrage, light raise, bar gauge will there. If there, we'll consider. If not, we won't consider. If there, we will add. If for delay, we won't add. Now, freight. Freights are of two types. Yes, sea route, air route. If nothing given, if nothing stated, we'll consider sea route. Ascertainable, actual basis. Not ascertainable, 20% of CFOB. Air route, ascertainable, 20% of CFOB or actual basis, whichever is lower. Yes, not ascertainable, 20% of CFOB. Insurance, ascertainable, actual basis, not ascertainable, 1.125% of. Now we'll solve the problems, sir. We'll solve like this. After that, 2-3 problems we'll practice by writing each and every point. Where while we solving customs duty, total problems will there. Just we are calculating now assessable value. Now, from the particulars given below, find out the assessable value of imported goods. Find out what, sir? Assessable value of imported goods. Cost of the mission at the factory of exporting country. Transportation charges incurred by exporter from his factory to the port of shipment. Handling charges for loading the mission. These three togetherly what, sir? FOB. Now what is FOB? $21,100. Buying commission not to be added. Freight, let's wait, freight exchange. Now FOB is equal to CFOB. Nothing is there now. On CFOB we need to add freight insurance. Freight, how much? $2,000. Insurance, if not given, we need to take 1.125% of CFOB. 21,100 into 1.125%. Hmm? 237 point. Okay. Now, what is CIF or assessable value here? How much? 21,100 plus 2,000, I think 23,100 plus 237. How much? 23,000 double three. This is in dollars. Convert into Indian rupees. Nothing given, they given only one rate. Consider it. How much? 19 lakhs? 670? What it is? CIFR assessable value. That's it. You got it, sir? Yes. Tomorrow we'll solve more problems in the customs. Yes. On assessable value, duty divide, total problems. Okay. Now illustration 2. XYZ Industries Limited imported certain equipment from Japan. Yes. Which means Japan is for what country? Exporter country. XYZ Industries Limited has imported certain equipment from Japan at an FOB cost of 4 lakh yens, Japanese currency, and other expenses incurred by Measures XYZ Industries in this connection are as follows. Freight from Japan to Indian port. It is what, sir? CIF freight. Wait. CIF freight. Yes, insurance, which is also covered under CIF. Design charges paid in Japan. Yes, that is the reason I said add engineering. Yes, design, including design also beneficial. Design charges, add to what? FOB. Now, Measures XYZ Industries has expended 2,000 rupees in India for development activities, not to be added. Engineering, design, development charges, plans, sketches outside India to be added. In India, not to be added. XYZ Industries has incurred a road transportation cost from Mumbai port to Mumbai factory. As I said, freights are of 3 types. Foreign factory to foreign port, FOB. Foreign port to Indian port, CIF. Indian port to Indian factory, not to be includable. Okay. CBIC rate given, interbank rate given, bank rate given. What is the exchange rate? Then 1 yen is equal to 0.69 rupees. Commission payable to agent, includable or not to be includable? Why? Agent commission includable, buying commission not includable. Now compute assessable values. Solution. Now uses are easy. First, FOB. What is the FOB? 4 lakh yens. Then we need add, what's our add? Design charges, 60,000 yens. Next, Agent commission. What, sir? They given in 5% in Indian rupees. Okay, wait. Then convert into rupees. This also. This also convert into rupees. 4,60,000 into 4,60,000 into 0.69. How much? 3 lakh? 3,17,400 in rupees. Yes, sir. Now 5%. 4 lakhs into 5% into 0.69. Agent commission, sir. Yeah, that's what I'm saying. I'm taking, and that is the reason 4 lakhs. 4 lakhs into 0.5% into 0.69. How much? 13,000? Now you got what? CFOB. What is the CFOB? What is the CFOB? 3 lakh? 200. Okay. On CFOB, what to be added? Freight, insurance. If nothing given, freight is which freight? Sea route or air route? Air route, cautious. Yes, take care. Concentrate much. Okay, now what is the freight, sir? 40,000 yens. Convert into rupees also. 40,000 into 0.69. 27,000? Now insurance directly they given in rupees. Now calculate CIF assessable value. 3,31,200 plus 27,600 plus 20,000. Three lakh? That's it. There is a print mistake here. What is a print mistake? I think insurance 20,078. Your book problem. In your book also the same mistake is there. I taken all your book problems. Na? If there is a mistake, problem, in your problem, they given a mistake. Sir, but even while you require to write 2 note points regarding what? Development charges in India not to be added. Transportation charges from Indian port to Indian factory not to be included. You need to mention it off. If not, they will feel you don't know. Okay. How shall your answer be different? Listen. If you freight and insurance not available, then take the above problem. If freight insurance not available, what you are taking? Freight is 20% of CFOB. Yes, 3,31,200 into 20%. How much? 60? Insurance if not given 1 point. Now how much? 3,31,200 into 1.125%. 3,000? Now add these to 3,31,200. So 3,31,200 plus 66,240 plus 37,26. How much? 4 lakh 1,000 1. Oh, sorry. I will see directly. Yeah, given 4 lakh 1,166. Correct or not? Learn the subject, you can play with it. Now, illustration number 4. BSA and Company Limited. BSA and Company Limited has imported a machine from UK from the following particulars furnished by them. Arrive at assessable value for the purpose of customs duty payable. Listen. FOB 10,000 UK pounds. FOB how much? 10,000 UK pounds. Freight, air. If air given, you need alert first. Be cautious. Take care proper. Okay. Now, wherever you see the word freight, air, yes, take the attention. Okay. Now, engineering design charges paid in UK to be added or not to be added? FOB they given to be added. License fees added or not to be added? Material supplied by the buyer free of cost added or not to be added? Insurance will this is CIF. Buying commission added or not to be added? Not to be added. Interbank rate, CBIC rate, what to be considered? Now exchange rate is 100.25 per UK pound. Okay. Demurrage charges added or not to be added? Not to be added. Why, sir? Delay. Delay. Not to be added. If it is not a delay, it to be added to a CFOB to get CIF. Okay, we'll solve the problem in fast. First, FOB 10,000 pounds. Add as engineering and design. How much? 500 pounds. Then license fees, 20% of FOB cost, which is 2,000 pounds. Materials, they given in rupees. Now you need to convert into rupees. As of now, how much? 12,500 into 100.25. 12 lakh plus value of material supplied by the buyer free of cost 20,000. How much? 12,73,125. What it is? Customs FOB or FOB value as per customs? Okay. Plus we need to add freight insurance. Here the issue starts. Now, air freight actual basis 20% of CFOB, whichever is lower. Okay, freight. Solve the freight. What is the actual basis? 3,000 into 100.25. How much it is? 3 lakh 750. Now 12,73,125 into 20%. How much? 2 lakh? Whichever is lower. Now what is the freight? Now insurance, they given directly 6,000. Now what is CIF? Assessable value. 15 lakhs? Perfect. Superb. Now understand the value of pro forma. Now illustration 5. X Limited imported goods from Switzerland 400 units at the rate 110 dollars per unit, which means 110 per unit. Following further information also needs to be considered: freight vessel, demurrage charges, insurance, royalty as a condition, exchange rate. Compute the assessable value. Sir, follow the procedure. FOB 400 units into each unit 110. How much, sir? $44,000. Then add first royalties to be added, both royalties. 1,000, 20,000. Both to be added, royalty. You got what? You got what? CFOB. Plus on CFOB you need to add freight 5,000, insurance 50, demurrage charges to be Added. Delay not to be added. This to be added, na? How much? 6050. Oh. Wait. This is we not calculated CFOB. Yeah. 44,000, 45,000, 65,000, 70,000, 71,000, 71,050. Yeah. 70,050 into 82. How much it is? 58 lakhs. We made a mistake. Where is a mistake? Oh, they deemed it as delay, idiot. They're not given clarity. If they assume, but generally to be added, they feel like that. Your book, then the same. We'll see balance tomorrow. Wind up the class for today. Bye. Good morning, friends. Let's revise the pro forma. Assessable value. To calculate assessable value, FOB, customs FOB, CIF. Listen. FOB, customs FOB, CIF. FOB, cost of the mission at the factory of exporting country, transportation charges up to the port of shipment. Yes, loading charges at the shipping port in the exporting country. In an easy way, if we are importing from Russia, Russia factory near, yes, Russia factory near, machinery cost. Yes, from factory to the port, transportation. From port to ship, loading charges, togetherly called as FOB. Next, engineering, design, development charges, plans, sketches outside India. Royalties, license fees. Commission and brokerage to be added if it is a buying commission not to be added. Packing cost to be added, durable returnable packing not to be added. Value of material supplied by the buyer free of cost. Value to be paid to the supplier in case of subsequent sale. Okay. Now, if you add these items to the FOB, you will get CFOB or customs FOB or FOB value as per customs, all are same. Now you need to add freight, insurance. Freight, yes, sea route, air route. Sea route, ascertainable actual basis, not ascertainable 20% of CFOB. Air freight, ascertainable actual basis, 20% of CFOB, whichever is lower, not ascertainable 20% of CFOB. Very good. Now insurance, ascertainable actual basis, not ascertainable 1.125% of CFOB. Very good. Okay. Ship demurrage, light race, barge gauge charges. If they are to be added to the CFOB, you will get CIF. CIF is equal to assessable value. Really, CIF is not the assessable value while at the time of formation. There is some landing charges. Due to Wipro case, it has been removed. Now, CIF is equal to assessable value. Now, exchange rate. CBIC, exchange rate notified by CBIC. If more than one CBIC given, bill of entry date, CBIC rate to be considered. Togetherly, exchange rate notified by CBIC at the time of bill of entry. Accessories, spare parts compulsorily supplied along with the main implements chargeable at a same rate. Freight are of 3. Yes, foreign factory to foreign port FOB, foreign port to Indian port CIF, Indian port to Indian factory not includable. Okay. Yes, duties, taxes, erection charges, vendor inspection charges after shipment not includable. Okay. Ship demurrage, light race, bargaies includable in case of delay, not includable. Demurrage charges in case of delay, not includable. Any doubts, sir? Okay. Now, only one problem we left as a balance in rule number 3. Thereafter, we will go rule number 4. Listen, sir. C Limited, an importer, imported a machine from USA. FOB cost $10,000. FOB cost how much, sir? $10,000. Now you say, freight from USA to Indian port, which covered under, sir? CIF, sir. Insurance also CIF. Design development charges in USA to be includable to the FOB, add to the FOB. Importer spent development work in India, includable or not includable? Not includable. Rate of exchange of RBI, rate of exchange announced by CBIC, bank rate, what to be considered? If one CBIC rate, consider one CBIC. More than one CBIC? Bill of entry date, CBIC rate. Then only one CBIC rate given. Now, foreign exporters having an agent in India, commission payable to a Indian agent, not to the buying agent. Then, agent commission to be added, buying commission not to be added. You say very easy. FOB $10,000 plus design development charges $2,000 design and development. Next, agent commission. Agent commission. How much is the agent commission, sir? 5% of FOB in Indian rupees. Now 10,000 into 5%, how much? 500, sir. 500 convert into rupees. 500 into 85.60. 40? 42,800. Now these also convert into rupees. This is there in the dollars, na? 12,000 into 85.60. How much? 10 lakhs? Okay. Yes, Indian port to Indian factory. Not to be included. You need to write as a notice all these points. Once rules are completed, full problem will solve today itself. Okay. Now, this is what, sir? CFOB. Now, what is CFOB? 10 lakhs. 28. 10 lakh, I think 30,000. 200 plus 40 to 800. I think 10 lakh 60, 10 lakh 70. Okay. 10 lakh 70,000 CFOB. Then on CFOB we need to calculate what, sir? Freight, insurance. If nothing mentioned, freight means which freight I said? Sea freight, sir. Ship or vessel. Air they must give. Okay. 10 lakh 70,000 is what? CFOB. You need to add. You need to add what, sir? Freight. What is the freight? 700 into 85.60. 59,920. Insurance they given in rupees only. Now, how much is the CIF for assessable value? 11 lakh? 11 lakh? How can you get that much amount? Correct. But you need to write note points. How many? Indian port to Indian factory not includable. Development charges in India not to be includable. You must write as a note. If not, you are going to lose the marks. They given whether to add it or not. You not added means it is not added. You need to write as a note. Okay. Now listen one thing. We computed accessible value. Why we calculated accessible value, sir? Why you calculated accessible value, sir? Listen. To compute the customs duty. Listen. Again I will explain. This is a final problem. The problem not there in your material. So that is the reason some I have taken from final. Computation of customs duty and integrated tax payable. Listen, I given already. Computation of customs duty and integrated tax payable. First, this is Roman number 1, accessible value. Now, on accessible value, basic customs duty. You need to calculate what, sir? Basic customs duty. On what? Roman 1. Then, Roman 3. SWS on Roman 2, 10% fixed. SWS means Social Welfare Surcharge. What is SWS? Social Welfare Surcharge. Okay. Now, togetherly it is subtotal. Roman 4 subtotal. That is 1 plus 2 plus 3. Now, Roman number 5 again. IGST. Why? Because as what is the definition of interstate supply? LOS, POS. LOS, POS. Two different states, two different union territories. One state, one union territory. Import, export. What supply? Interstate supply. What supply? What to believe it? IGST. Yes, but import of goods taken care by customs. Along with the customs, IGST also to be levied. Now, IGST on subtotal. IGST on what, sir? Subtotal. Togetherly, total imported cost. What it is, sir? Total imported cost. Any doubts? Now, customs duty and integrated tax payable is equal to BCD plus social welfare surcharge plus IGST. BCD, basic customs duty, social welfare surcharge, yes, IGST. Okay, or total customs duty, which means a total imported cost minus accessible value. We added only these three, sir. Basic customs duty, social welfare surcharge, IGST, or total minus accessible value. Total minus accessible value. Okay. This is, yes, on accessible value, the following are the duties. At last, we need to solve these problems. Total problem. Then why you said now, sir? Yes, there is rule number 4. For that, a small problem is there. Final. Yes, my life, that problem. First attempt I failed due to that problem. I got 194, 196. 194 in group 1, 196 in group 2. So I passed all the subjects. I thought I am very talented in that time indirect taxes. I not yet prepared. I thought that I know very well, and I failed. This problem they asked. I think I will get. I got 2. I think. I feel that they asked for 8 marks. I got 2. See, what is the rule number 4? First, rule number 1, applicability. Rule number 2, definitions. Rule number 3, transaction value. Rule number 4, weight identical goods. Rule number 4 is what, sir? Identical. Listen. Now, Raghav settled in USA. Raghav settled in USA. Okay. Yes, he earned lots of crores. He's a multi-millionaire over there. He's a multi-millionaire. Now, yes, I am from AP. I know him very well. One day I make a phone call. You are very happy. You earned a lot of crores. You are leading a rich life. Think about the farmers in our Rayalaseema. Sir, even I am also thinking bad about them, sir. Oh, then do something for them. Do something for them. Then he said, sir, I will give agro machinery, fertilizer sprinkling machine. That worth is 30,000. I will give free of cost. Will give free of cost. But you need to pay $20 for each emission for freight and insurance. I am ready to give. But you need to give $20 for freight and insurance. Okay, he given freely. I given $20 for a freight and insurance, and I imported into India to AP and distributed the farmers in Rayalaseema who are fully affected with the drought. Okay. Now, Ramesh is the customs commissioner. He comes to me, started asking, pay the duty. Pay the duty. Okay, where is the assessable value to calculate the duty? He given freely. He given freely. Then he asked. Yes, he did many sins. That is the reason he donated. You also helped. Regarding your matter, why the government is going to lose the money? I want customs duty. If import done, I want the duty. Then I said, okay, well, ready. Where is the assessable value? Where is the assessable value? Then rule number 4 taken into picture. Rule number 4 said, yes, where I imported? Where? Yes, I imported to AP from USA. I imported from USA. Yes or no? Then they directed. Raghav given freely to you. Now, if Raghav selling to others, consider that price. Consider that price. Sir, Raghav not selling to anybody, sir. Okay. In USA, some other persons are dealing with the agro sprinkling machine. Consider that price. Sir, many persons are there, sir. Lowest of all to be considered. Lowest of all to be considered. Identical goods means related type of goods. If any other manufacturer manufacturing, consider that price. Now, let me explain with an example. Now, Udbhav, like me, he completed CMA final in 12 attempts. For example, sir. Later, he go to UK, started a company, and he is the CFO. Per year package is 800 CR. Full happy. Who? Udbhav. He is a company CFO. His yearly remuneration is 800 crores. And I am a faculty for him. Even while he pursuing. Now also I am running as a faculty. One day I make a phone call to Udbhav. Udbhav, you enjoying the life? You qualified? See, yes, many students like you in SR Nagar and Amirpet are jobless. They are fighting for their life survival. Can't you do anything for them? Remember your those days. In what way you are leading your life in Sarat Nagar. Now think about your life and help them. I said, okay sir, I will help. He said, I will give laptops, sir, to the CA and CMA students, CA and CMA final students in Hyderabad. I give the laptop free of cost, sir. But you need to pay $30 as freight and insurance. $30 as freight and insurance. Okay. Then I imported and I distributed to the students, yes, who are residing in Sanat Nagar and Amirpet, SR Nagar, the CA and CMA final students. Okay. Then customs officer, customs commissioner asked the duty. Duty to be paid on what? Duty to be paid on what? Now, rule number 4 come into the picture. Udbhav given free of cost to you. Is Udbhav selling in UK? Consider that price. If Udbhav selling in UK, yes, that is for example, $1,000, £1,000. Consider that price. If Udbhav not dealing in UK, some other manufacturers, yes, 1, 2, 3, 4 manufacturers are dealing with laptops. The price 900, 600, 700, 850. 4 members. Lowest price to be considered. What is the lowest price? 600. Now from Udbhav, I imported, yes, 1,000 laptops. Now 1,000 laptops, each laptop that is 600, yes, pounds, sorry, 600 pounds into each a pound 73 rupees. Each a pound 73 rupees. How much? How much? Okay. Now we'll see the topic. You got the basic? Transaction value of identical goods. Now see, the value of imported goods shall be the transaction value of identical goods sold for export into India. And India imported, there exported. Okay. In what way? What is identical goods? Goods must be same in all the respects, including physical quantity. This method applicable only when following conditions are satisfied. Identical goods compare with other goods of same country. First you need to see which manufacturer? Same manufacturer. If price not available, then price of other manufacturers of same country. If more than is there, lowest of the value should be taken. Now, Udbhav from UK, yes, given freely the laptops to me to distribute the same to the, yes, CA, CMA final students in Hyderabad. Okay. Now, what price I need to consider? Udbhav, if selling for others, I need to consider that price. If he is not selling in UK, other manufacturers to be considered. Many are there, lowest of all to be considered. Now, this is the problem. They asked for 8 marks. A small mistake. I think I got 2 and I failed. 2 problems changed my life. Thereafter, it takes 7 attempts to complete my final. Small mistake is enough. It will show what the life it is. Now, a consignment of 800 metric tons of edible oil of Malaysian origin. A consignment of 800 metric tons of Malaysian origin was imported by a charitable organization in India to distribute below poverty line citizens in backward area. Below poverty line means very poor people. In Telugu, a different word is there. Daridrapu rekaki diguna unnavallu. You are not that much talented, I know. Keep it remember, that is poor people. Yes, a charitable institution imported how many metric tons of oil, sir? 800 metric tons. Why they are importing? To distribute to below poverty line citizens, which means poor people. That is a scheme designed by Food and Agriculture Organization. These being a special transaction, they charged only a nominal price of 10 per metric ton. Nominal price of how much, sir? 10 per metric ton to cover the freight and insurance, which means they are giving freely. They charged only $10 per metric ton for what? Freight and insurance. The customs house found that, and about the time of import of this gift consignment, the following are the imports of edible oil of Malaysian origin. Okay. First, is there is a accessible value? No, they given freely. They charge $10 for what? Freight and insurance, which means they given freely. Now you need to see that manufacturer selling for price to others, not selling. Then other manufacturer of same country. Many manufacturers are there, then lowest price. Okay, that manufacturer is not selling. Now in that country many manufacturers are there. What price to be considered? Lowest. What is the lowest price? $160. $160. Now I calculated this also. The problem is they given CIF. I added freight and insurance again. I take another CIF means already that includes of freight and insurance. Me, talented person, add $10 freight and 1.125% of insurance. I think I'll got 2 marks for 8. Small mistake changed my life. Okay, it is others CIF. CIF which includes of what, sir? Which means are you allowed to take the $10 freight insurance? We are considering others price. Others CIF means already include of freight and insurance. Now, the exchange rate was $1 is equal to 63 rupees and the basic customs duty was 15%, no IGST. And they asked, compute the amount of duty leviable. In inter, they given the theory, but not a problem. That is the reason I taken the final problem. Even, yes, that time I wrote the same problem there now also. I taken that problem as a memory. Now you say, you calculate first. First you need to consider accessible value. Direct. What is the accessible value? How many units? 800. Yes, each unit is $160. Yes, each dollar is? Okay, now what is the accessible value, sir? How much? 80 lakhs 64,000. Can I add freight and insurance? Okay, then on accessible value we need to add basic customs duty 15%. How much? Social welfare surcharge levied on what? Basic customs duty only. Fixed 10%. 1,20,960. Wait. Now, if there is no IGST, duties means what? BCD plus social welfare surcharge. That is, calculate these two. 560. Why? Because my problem wrong. If accessible value wrong, automatically basic custom duty wrong. Social welfare surcharge wrong. Total tax wrong. They ask you to calculate duty. Small mistake. So this is what, sir? Identical goods. First, rule number 3 you need to follow. If you cannot determine as per rule number 3, then come to rule number 4, that is transaction value of identical goods. This is useful when we are imported goods free of cost. Now, similar goods. Okay. Now, my Samsung S24 Ultra compare with iPhone, not with the Redmi or Realme. So, Lloyd AC compared with Daikin. Yes. Okay. Samsung washing machine compare with? Yes, very good. Same standard level. Sir, what is the difference between similar and identical? Same means 100% same. Identical means mostly the same with minor differences. Some twins are identical. Even a Kapil Sharma show is there. Chinky Minky. You don't know? Yeah, उनको बता नहीं. So, Chinky Minky. Yeah. So, those are identical twins. Even you saw the movie Jeans, Aishwarya acted. Their brothers shown, Prashant. They are identical twins. Similar means if you observe Kajal Agarwal, Nisha Agarwal from one side, they look like same. They are similar. Similar means same but with a major differences. Yes, even you observe Udbhav and Vijay Devarkonda, similar, no? Yes or no? Now, Madhulika and Shraddha Kapoor also similar, no? Hey, don't compare with me, with others. Okay, yes, similar, which means same but with a major differences. Okay, now see sir, similar, goods, identical. If you see the difference, that is enough. Goods same in all the respects except minor differences. Goods having same characteristics and same functions. Then it is similar. Camera 50 megapixel, two phones are similar. 50 megapixel in iPhone should not be compared with 50 megapixel in Redmi phone. Should not given the same clarity. Why? Because lens is different. Yeah, it to be compared with Samsung. Similar is different. Now, Hero Honda two-wheeler products namely Splendor, Passion. Organizing both are identical. Hero Honda Splendor and Bajaj S scooter similar but not identical. Okay, that is rule number 5. Similar goods. Okay, for example, if I imported Lloyd AC, I don't know the price, but I know the Daikin AC price which is imported from outside India. Consider that price. Consider that price, but both should be 1.5 ton. I cannot compare 1.5 ton Lloyd AC with 1 ton Daikin. I have to compare Lloyd with Daikin. That is ought to same features. Now, what is rule number 1? Rule number 1, applicability. Rule number 2, rule number 1, rule number 2, very good. Rule number 3, transaction value. Rule number 4, rule number 5, similar goods. Now rule number 6, two different. Rule number 6 said, if value cannot be determined as per rule 3, 4, 5, 6 said, go to 7. 6 said, go to 7. If not 7, then go to 8. These are all said by 6. What 6 said? If value cannot be determined as per rule 3, 4, 5, 6 said, go to 7. If not, go to 8. If the value of imported goods cannot be determined under the provisions of rule 3, 4, 5, then value determined as per rule 7. If 7 cannot, then 8. Who said? Rule number 6 said determination of value. So, once again, rule number 1, rule number 2, rule number 3, rule number 4, rule number 5, rule number 6, determination of value. What rule number 6 said? If value cannot be determined as per rule 3, 4, 5. Yes, rule 6 said go to 7. If not, go to 8. Now 7 important. Only for examination, rule 3, 4, 7. Rest of no problems in final also not there. Now, Rule number 7. Listen, sir. Useful, very important. India. I am not a Picasso. Feel it as a India. Are Indian Ocean, Bay of Bengal, both sides. I'm not a Picasso. Okay, ocean. Now, India is up to in waters. Exclusive economic zone only. This is what? International waters. Professionally, we call it as high seas. Any doubts? Now, Sri Lanka. China. A vessel going from Sri Lanka to China. Near to the India in high seas. In high seas. Okay. You are in the border state. You are in the border state. Yes. While the ship stopped in the international waters or high seas, he should he go to the big ship and purchase goods there. He purchased goods there. Yes, an Indian who is residing in a border state, go to the high seas in which the ship has been there, purchased goods from there. Now, why they will purchase like that? Now you observe. A bus is going from Mumbai to Bangalore via Hyderabad. Or a lorry going from Mumbai to Bangalore via Hyderabad while carrying the stock. If it reaches to Bangalore, on the stock they will add freight, that is delivery charges. While it moving, once it stopped in Hyderabad, if I purchase the goods, delivery charges to be included or not to be included? Think wise. A lorry going from Mumbai to Bangalore. Yes, lorry capacity 10,000 units. Yes, in a Bangalore a person ordered 9,000 units, but they carrying 10,000 units. Okay, from where to where? Mumbai to Bangalore via Hyderabad. While it stopped near Hyderabad, I purchased in Hyderabad 5,000 units. For the 5,000 units, freight or delivery charges to be added or not to be added? Not to be added. Why? Already who paid? A person who is in Bangalore. Ship moving from Sri Lanka to China. Yes, now ship moving from Sri Lanka to, or China to Sri Lanka. Now China to Sri Lanka. Okay. Now while a ship stopped near, India in the international waters, near India, but it is there in the international waters, high seas. We purchased it there. We go to that place. We purchased it there. Freight and insurance to be added or not to be added? Not to be added. Not to be added. Okay. We purchased 500 units. Each unit of yes, $10,000. Each unit of $10,000. Listen. Now, automatically who comes to the picture? Customs officer. Pay the money. Sir, we not imported, sir. Tell me the import definition. From a place outside India to a place in India. Where you purchased? Is it India? You brought to? Which means it is a import. Oh, import done. You need to pay what? Import duty. Pay. Now, sir, okay, I'm ready to pay. On what amount? On what amount? Then rule number 7 comes into picture. Purchase from high seas. Now, they said, if any person authorizedly imported from China, their price is $15,000. How much? In that, freight insurance, freight is 1500, insurance is, yes, for example, 700. Total 2200, which includes freight. Okay. Generally, we imported from high seas. The price is $10,000 per unit. Then government said, yes, even you taken from high seas outside India, you are getting into India, which to be considered as import. Pay the duty. Then, yes, we said we are ready to pay. Then what is the assessable value? Wait. Authorizedly, a person imported there from that country. Na? For example, Woodbow imported from that country for each unit of $15,000 is a imported cost. Yes, or it is a assessable value. Then they asked, consider that value. Then we started arguing. Wait, sir, that include freight and insurance. We not incurred any freight and insurance. We have purchased near to the India in high seas, which means we are not, yes, why my price is low? There is no freight and insurance. Then government said, oh, that na, okay, from that price deduct freight and insurance. For Woodbow, $15,000. For Woodbow, how much? You said why that price is high means freight and insurance. Consider the Woodbow price. There less freight, less insurance. Freight 1500, insurance 800. Now your price. What is your price? Now take this price. Then some other issue arises. Sir, many persons imported from China to India, sir. Many persons imported from, yes, imported from China to India, sir. Then, wait, highest quantity price. Why? Because if quantity increase, the price to be decreased. Sorry, if you go and purchase a rice bag, they used to sell 1000. If you ask 100 rice bags, they used to sell for 850 or 870. Yes or no, sir? Okay, now here transaction taken place in high seas. Transaction taken place in high seas. Now what government said? If some person authorizedly imported, consider that price. In that deduct what? Freight and insurance. If many persons are imported, highest quantity price to be considered. Now rule number 7, deductive value. What to be deducted, sir? Freight and insurance. Rule number 7 applicable where the transaction taken place in high seas. High seas is India or other than India? Other than India. Import definition matched or not? What is an import? From a place outside India to a place in India. It's not an India. You brought to India means it is also an import. If it is an import, importer needs to pay a duty. Then assessable value. Government said authorizedly imported person price consider. There in that price and freight and insurance deducted. Sorry, but many persons are imported from outside India, then highest quantity price. What to be deducted, sir? At the request of importer, the customs officer approves either deductive or computed. If deductive method, the valuation as follows. Assessable value is calculated by reducing post-imported cost, which what to be reduced, sir? Freight insurance. Okay, we'll solve the problem. Very important. Problems is only rule number 3, rule number 4, rule number 7. 90% from rule number 3 only. Okay. X Limited sells in India a price list which favorable unit prices for purchases made in larger quantities. How can you identify it is rule number 7? If you see the word high seas, then you can easily identify that is. Okay. Now leave the quantities. The selling price includes post-shipment expenses, freight, insurance. Number of units imported from high seas. If you see the word high seas, then you get a clarity that is what? Rule number 7, deductive value. Why? Rule number 7, deductive value. What to be deducted value? What to be deducted? Why freight and insurance to be deducted? We are not going to incur. Why we purchase near the high seas? Yes, related to India, nearby place, no import. Which means import is there, no freight and insurance. Okay. Now, how many units we imported? 5,000 units. We want the assessable value. How to calculate the assessable value? I said highest quantity price to be considered. Now see, sir, the prices are 90, 95, 100. Now you calculate with 90. What there, sir? 1 into 30, that is 30. 5 into 50 into 1. Yes, how many units? 30 plus 50. The units are 80. Yes or no, sir? How many units? Okay. With 95 calculate. 5 into 11, that is 55 units. Yes, now 100 price. 10 into 5, 50. 5 into 3, 15. Total 50 plus 15, that is 65. Highest units are what, sir? 80 units. Now what price to be considered for each unit? 90. Now you solve the problem. 5,000 units into 90. Yes, how much? This is our assessable value, that person assessable value. That person assessable value. To consider, yes, to get our value, we need to deduct freight, insurance. What is freight? What is insurance? 6,000. Now what is the assessable value? 4.2 lakhs. Okay. Wait. BCD. What is the BCD rate they given? Where it is given? Okay, down. 12%. How much? Wait, how much? 50,000. Okay, now on BCD what to be charged? 10%. That is 5040. Yes, some books, yes, they got more talent. What they are doing? 12% plus 10%. That is 1.2. 12 plus 1.2, that is 13.2. They are taking directly. It's taken from final book. They taken directly 13.2. How it gets? 12% plus 12% into 10, that is 1.2. Total it is 13.2. Don't do like that. Solve as per our procedure. Now what is the duty, sir? There is no IGST. What is the duty? 55,000? This is also a final problem. There is a problem for you, inter also. That also we will solve. It's a final problem. So problems chances 3, 4, 7. Okay, once again. First, rule number 1, applicability. Rule number 2, definitions. Rule number 3, transaction value. Rule number 4, identical goods. Rule number 5, similar goods. Rule number 6, yes, determination of value. What they said, if value cannot be determined as per rule 3, 4, 5, 6 said go to 7, if not go to 8. Then come to 8, computed value. Now onwards, very easy. Computed value. Computed means calculated value. Computed means what? What is the price? Cost plus profit. Consider the cost, add profit, then you get a price. Sir, how to get the cost, sir? Then see rule number 10. Then see rule number 10. Rule number 10 said, you got the FOB and customs FOB in rule number 3. Then add freight and insurance. Then add freight, we know, air, ascertainable, actual basis, not ascertainable, 20%. Yes. Air route, ascertainable, actual basis, 20% of CFOB, whichever is lower. Very good. Yes, not ascertainable, 20% of CFOB. Insurance, ascertainable, actual basis, not ascertainable, 1.125%. This is said by rule number 10, freight and insurance. I given separate explanation now, that is said by rule number 10. So, rule number 8 said, computed value, cost plus profit. Get the cost from rule number 10. Rule number 10 said, yes, rule number 3, we computed as, yes, what? CFOB, add freight and insurance, plus profit. That is the reason I said very easy. Cost plus profit. Cost plus profit. Add cost plus profit. Now, rule number 9, residual method, which is also called as best judgment method. What, sir? Best judgment. Best judgment, you say whatever it may be, that is okay. Relatedly. Best judgment. Okay. Rule number 10, cost and services. We already know, freight plus insurance. Now up to 10 we covered. Rule number 1. Rule number 1. Rule number 2. Rule number 3. Rule number 4. Identical goods. Rule number 5. Rule number 6. Declaration of value. If yes, value cannot be determined as per 3, 4, 5. Yes, 6 said go to 7, if not 8. 7. Deductive value. What to be deducted? Freight and insurance. It is applicable when transaction takes place in high seas. Rule number 8. Computed value, cost plus profit. Cost you get in rule number 10. Rule number 9. Residual method or best judgment method. Nothing is there. Rule number 10. Cost and services, which means CFOB, freight plus insurance. 99% students are just learning rule number 3. If for a case asked rule number 4 yet not asked, but rule number 7 once asked, all put a different faces. Nobody knows this. You should learn as per the rules like final. If the paper is tough, if you go by selected, then if rule number 7 asked, all will get 0. I'm expecting to ask. They given in the book now. Even they go by selected, they should ask sometime like this. Then, yes, real worthy student will come outside. Rule number 11. Okay. Declaration by importer. Here, department asked importer, you say the price. You say the value that we will consider. Okay. Now, I taken Madhulika, my sister, yes, to Udupi hotel. We consumed masala dosa. Then that person known to me. He said, sir, your wish sir, give whatever you want. If I give 10 rupees for 2 masala dosas, he should say yes for it. What sir, for 10 rupees even tea will also not a problem sir. Yes sir, tea at 12 rupees sir, but 10 rupees tea only will come sir. Arre, what sir, saying you are a CA given 10 rupees, arre. Rejected. So 11, imported to declare a value. If they declared properly, we will take. If they said low, then rule number 12, rejected. Rejection of declared value. Yes, if they said properly, then rule number 11, consider. If they said low, mostly all will said no. Okay, you say Ramesh, on what price you are going to purchase my mobile phone? This is 1,20,000. On what price you are ready now? 50,000. 1,500,000. Very good. At least I expected 20. Wow. Okay, then rejected. Rule number 12, rejected. Now rule number 13, interpretative notes. Any extra points? That's it. These are the rules, sir. Once again, in MCQ final they asked a rule number once. You should learn in depth from inter onwards. Rule number 1, rule number 2, rule number 3, rule number 4, rule number 5, rule number 6, deductive value. So rule number 6, determination of value. Value cannot be determined as per 3, 4, 5, 6 said go to 7, if not go to 8. 7, deductive value, transaction taken place in high C's. Rule number 8, computed value. Rule number 9, residual method or best judgment method. Rule number 10, cost and services. Rule number 11, declaration by importer. Rule number 12, rejection of declared value. Very less amount is said. Rule number 13, interpretative notes. Keep aside export goods. We'll see later. Export. Chances is too low to ask export. We'll see, provided, but no problem is there. Okay, we'll solve the MCQs. After that, total questions. Total means in depth along with the customs duty. Around 10 I given extra. Yes, we'll solve all the problems, but 2 problems we'll solve with presentation and 1 problem you need to solve with presentation. I will check. Where the insurance amount is not available for ascertaining the assessable value of customs duty, what is the percentage of FOB value to be taken for insurance? Yes. If not ascertainable, actual basis, not ascertainable, 1.125%. They given percentage, not a problem. No need to write. Now, which are the same in all respects, including physical quantity. Chinky Minky, jeans Prashant. That's it. Identical goods. Where the transport charges, transport means what? Freight. Not available for ascertaining the assessable value. What percentage to be taken on FOB? 20%. If nothing mentioned, is it sea route or air route? That's it. Buying commission shall not be included in the assessable value. Is it correct? Yes. They given wrong. Yes. Agent commission includable. Or at least here, shall not be. You can add like this. What is the reason to change this? Change the question. Buying commission shall be includable. Shall not be includable. Is the statement correct? Wait. Buying commission shall be includable, shall not be includable, which means the statement is incorrect only. Correct one only, man. Yeah. Buying commission shall not be includable. The statement is the statement is correct. Yes, shall be includable is not a correct statement. Yes, includable, shall not be includable is a correct statement. Includable is not a correct statement. Is the statement is correct? No, correct. Oh, again. Okay. Transportation charges incurred by importer. Spell mistake. For transporting goods from factory of exporter to the port of exportation, which is what? Freights are of 3. FOB, yes, FOB freight, foreign factory to foreign port to Indian port, CIF, Indian port to Indian factory, not includable. Foreign factory to foreign port, covered under FOB. Yes, includable and accessible value, all are includable. They given very easy. If they say it is includable FOB, yes. No need to learn separately MCQs. Along with the subject, it will comes. Without the subject, some are asking, sir, why can't you conduct a MCQ class, sir? Without knowing the subject, what can I explain? In what way you are going to understand? Asking MCQ class, sir. If you have a subject, then we will discuss. Okay. Now see, sir. Methods. Usually to solve the accessible value, first we will start with rule number 3. Okay. Rule number 3, okay. End task. If rule number 3 not possible, then we will see rule number 4. That is second method. If rule number 4 possible, not a problem. If not, go to rule number 5, similar goods. If not possible, then go to rule number 7. Array, not 6, 7. If not possible, go to rule number 8. That is also not possible, then rule number 9, best judgment. Pay whatever you feel right. Which means this is just for knowledge. First rule number 3. If not, rule number 4. If not, rule number 5. If not, rule number 7. If not, rule number 8. If not, rule number 9. Now, start the main topic, main chance of asking questions. Computation of customs duty and IGST payable. Already we covered, we'll see it again. Accessible value, how we get accessible value? With the rules. Generally, rule number 3 mostly. FOB, CFOB, CIF. CIF is equal to in reality, CIF is not a accessible value. On CIF, what is there? Landing charges. Wipro file a case in Supreme Court and won the case. Now landing charges removed. Yes, CIF is equal to accessible value. Keep in mind, they are asking for interviews. Accessible value. Now on accessible value, what to be levied? Basic customs duty. On what? Roman 1. 1, 2, 3, 4, 5. Okay. Now, basic custom duty levied on what? Accessible value. Social welfare surcharge on basic customs duty. That is fixed 10%. That is fixed 10%. Now subtotal is what, sir? Basic customs duty, social welfare surcharge, accessible value. I think I changed in your material with Romans. That is second copy, I think. Now you will get fourth copy, the material with all rectifications. So on accessible value, what to be levied? On accessible value, what to be levied? Basic custom duty. On basic customs duty? Yes. Now subtotal means accessible value, basic customs duty, social welfare surcharge. IGST levied on subtotal. Now total duties are, yes, total customs duty and integrated tax payable is what, sir? Yes, that is basic customs duty, social welfare surcharge, IGST, or total imported cost minus accessible value. Total imported cost minus, that's it. Now, rate of customs duty. Rate of customs duty. Listen, listen, listen. Customs duty. First, bill of entry date, entry inwards date. Bill of entry date, entry inwards date. Whichever is later. That date rate to be considered. Okay, bill of entry date BCD is equal to 20%, entry inwards date BCD is equal to 12%. Now the date is, bill of entry date is 15th November 2024, entry inwards date is 13th November 2024. Now what is the basic customs duty rate? Whichever is later, sir. Now at the time what rate is there? Now BCD is equal to 20%. Now basic customs duty, bill of entry date, entry inwards date, whichever is later, that date rate to be considered in an easy way. Yes, duty prevailing at bill of entry, entry inwards, whichever is later. Now you calculate, I will ask both customs duty and exchange rate also. Now it is 15th August 24. This is, yes, 18th September 24. Now what is the bill of, what is the duty rate? What is the duty rate I asked? That's it. Now in that CBIC exchange rate, $1 is equal to 54 rupees. $1 is equal to 63 rupees. What is the exchange rate? 54. How can you find? Bill of, if more than one CBIC rate, bill of entry CBIC rate to be considered. Yes, but for a customs duty, what rate to be considered? Bill of entry date, entry inwards date, whichever is later. Now, rate of BCD, rate of duty at the time. Here time means what, sir? Date. Whichever is later. Rate of BCD prevailing on the date applicable. In an easy way you can say duty prevailing bill of entry date, entry inwards date, whichever is later. On the date, rate of BCD to be considered. Bill of entry, entry inwards. Bill of entry, entry inwards. Whichever is later. Whichever date is later, that to be considered. Here what is main important? Whichever is later date. That date what duty is there? That will be, that rate to be considered. Okay, sir. Now we'll solve the full problems. Yes, I given around mostly 10 problems. I think 10 or more than 10. Yeah, 10. Already we solved around 8 problems. But we solved as per the rule wise. Now total problem. Mostly total problems chances is high. Okay. Assessable value of an item imported 2 lakhs. Item imported 2 lakhs. Basic customs duty 10%. integrated tax, IGST, 8. Why integrated tax to be levied? Why, sir? Interstate supply, customs and IGST both to be levied. Social welfare surcharge 10%, whether they given or not, it is 10% on basic customs duty. Compute the total customs duty and IGST payable. You say first, assessable value. On assessable value, what to be? On basic custom duty, social welfare surcharge. Subtotal is equal to assessable value, basic custom duty, social welfare surcharge. IGST on subtotal. Then how can you calculate the duty? BCD, social welfare surcharge, BCD, social welfare surcharge, IGST, or total imported cost minus assessable value. Okay, we'll calculate. You say assessable value 2 lakhs, BCD 10%, yes, 20,000, social welfare surcharge 10% on BCD 2,000, subtotal that is 2 lakhs 22,000, IGST is they given? 18%. Where are they given? Oh yeah, they're given 18%. How much? 39,000. Now the duties are, you say the duties are BCD, social welfare surcharge, IGST. What is the total? 61,000. That's it. In another way is also there. Yes. What is the another way? First calculate the total imported cost. Total imported cost. How much? Total imported cost how much? 2,22,000 plus 39,960. 2 lakh 61,000. Then total, yes, some other way, total imported cost minus assessable value, that is 2,96,000, sorry, 2,61,960 minus 2 lakhs, the same. All following these, but you should know beyond the same. Why I explained these total imported cost, but while you go in practical working in a company, you want this. Why? Because your company CEO or CFO comes to the cost accountant. What is the imported cost, man? Sir, duty. Array, tell me the cost of the machinery. Then, but in the exam, they are asking duties. Yes, along with all duties, assessable value called as total imported cost. In the practicality scenario, company MD or CEO will ask, tell me the imported cost, man. You imported a machine. Then how to calculate the duties? Total imported cost minus assessable value. Yes, but as per book we are solving BCD plus social welfare surcharge plus IGST. We added only that to the assessable value. If you deduct the total imported cost minus assessable value, automatically it will comes. Any doubt, sir? Small problem. We'll solve two big problems. And you will solve one problem. Illustration 2. X and Co imported some goods from USA for being used in the manufacture of final product. Determine the exchange rate to be considered for computation of import duty from the following. They asked only exchange rate. You say first, what is the exchange rate formula? If one rate is there, CBIC consider more than one rate. Bill of entry date, CBIC rate. Okay, here many given, then you need to, many CBIC is given. Import general manifest, entry inwards, bill of entry. One, yes, only one CBIC given, consider that. More than one given, bill of entry date, CBIC rate. Then what is the exchange rate, sir? Exchange rate is, that's it. Not required for all. If many are there, if one is there, consider the CBIC rate. If many differents are given, CBIC consider. One CBIC, okay. More than one CBIC, bill of entry date, CBIC rate. Now, important problem. Ramesh, Raghav, give you a material. One person will solve practically. Okay, listen first. After that, we will solve in practical with clarity. Malya Internationals Limited. Malya Internationals Limited. Yes, imported a mission by air from Germany. Bill of entry is presented on 21/25. However, entry inwards granted. This is the bill of entry. This is the entry inwards. We should know. Yes, right. For avoiding the confusion. This is what? Bill of entry. After they given the question paper, you should write entry inwards. Okay. CIF value of mission. Yes, 5,500 USD. Air. If air given, attention, be cautious. Air freight paid 1250 USD. Insurance charges, rate of exchange, basic custom duty, IGST rate, computation of assessable value in INR for the purpose of levying customs duty. They not asked customs duty. They not asked customs duty. Yes, after that they asked again as well as total customs duty. If they given only up to this, it's enough to calculate assessable value. Why? Because calculate the assessable value in INR for the purpose of levy of customs duty as well as total customs duty. You say, sir, first what is the rate of exchange? What is the rate of exchange? Usually one CBIC that considered. More than one CBIC given? Then what CBIC to be taken? Then what is the exchange rate now? That's it, superb. Now, then rate of duty they given. We'll solve the problem in total. You also needs to follow the same procedure. If you want, you can write in the rough notes if want. Or keep it, remember. Listen. Computation of assessable value. Now, particulars, amount. Particulars. First, what they given, sir? CIF. That is $5,500. Issue arisen with what, sir? Air freight. There is a yes, provision for air. Yes, sir. Air freight should not exceed 20% of CFOB. For that I given a separate formula. Actual basis 20% of CFOB. It is correct or not? How can we identify? First we want to calculate CFOB. Yes or no? How we can calculate CFOB? Reverse nana. CFOB plus freight plus insurance is equal to CIF. CFOB. Use your brains. CFOB, freight, insurance is CIF. If we want CFOB with CIF, do reverse. CIF minus freight, insurance, you will get correct CFOB. We want corrected CFOB now. Now less freight, less insurance. Freight, how much, sir? 1250. Insurance, 100. Now, what it is? CFOB. CFOB. How much? 4,150. Sir, if nothing is there, FOB is equal to CFOB. Yes or no? Now, we want on CFOB what to be added correct to get the assessable value? Freight. Now, freight. What is the freight note point? Don't solve here. Write as a notes while solving in the exam. Now, freight. 20% of CFOB or actual amount, whichever is lower. Yes or no? That is the provision. Now, what is the CFOB? 4150 into exchange rate 86 into 20%. 70. Now, actual basis, that is 4150 into actual basis 1250 into 86. How much, sir? 1 lakh? Now, whichever is lower, sir? Now, what is the correct freight, sir? 71,350. Yes, sir? No, sir? Now, even compute the CFOB also into 86. We started in rupees now. Use symbols properly, whether it is dollar or rupee, every time while in a conversion. How much? Is it dollars or rupees? Then you write the symbol. It's a must. Some students are just putting the digits without mentioning is it a dollar or a rupee. Then they won't consider. Now plus insurance. What is insurance, sir? They given 100 USD into 86. 100 USD into 86. 8,000. Insurance. Now, what is the CIF and assessable value? 4,36,850. That's it. Corrected. Now, we need to calculate now what, sir? Computation of customs duty and integrated tax payable. Okay, now assessable value. How much, sir, assessable value? 4,36,850. What? What? Is it 880? Which one? How much is the freight? Okay, we made a mistake there. Okay. What means you need to say rupees or dollars, idiot? Now BCD. What is the BCD rate? Basic custom duty. They given in the problem directly. Then 8. Social welfare surcharge. Fixed on what? Now subtotal. What is subtotal? Assessable value, basic custom duty, social welfare surcharge. How much, sir? 9? Okay. Now, IGST on subtotal, what is the percentage? Then calculate. 289. Now what is the duty, sir? BCD, social welfare surcharge, IGST. What is the total? So come on, we are doing presentation now. Now total customs duty, you need to follow like this. Total customs duty and integrated tax. Payable is equal to BCD plus social welfare surcharge, sir, plus IGST. That is 4,36,88 plus 4,008 plus 87,289. How much, sir? In this way you need to present in a nice way. Now see the answer. Correct? Perfect. This is what? Assessable value. Now duty, the same? We got 1 rupee difference. Perfect. Okay. Any doubts in the today's class? Sir, evening 6 to 7, we will solve this. 7 to 8, just 45 minutes is enough for today's law chapter. No, not meetings, hero, annual written. So, by taking 1 hour, we'll solve all these problems. Yes, by evening, yes, we'll cover, and 1 question I will put a exam in our law class timings. With presentation I want. Wind up the class for today. We'll meet evening hero, 1 hour class. That person needs to come now. Okay. Wind up the class for today. Bye. We covered up to 3 problems. Morning and balance we complete now. In first we will revise the pro forma. Assessable value FOB, customs FOB, CIF is equal to assessable value. FOB, if I are imported from Russia factory near machinery cost, Russian factory to Russian port transportation, Russian port to ship loading charges togetherly FOB. Now add design, development charges, plans, sketches outside India, royalties, license fees, commission and brokerage except buying commission. Yes, packing cost except durable and returnable packing. Value of material supplied by the buyer free of cost. Now value paid to the supplier for subsequent sale, foreign supplier. Togetherly CFOB. If nothing is there, FOB is equal to CFOB. For CFOB, freight, insurance added, considered as CIF. CIF is equal to assessable value. Why? No landing charges. Freight, sea route, ascertainable actual basis, not ascertainable 20% of CFOB. Air route, ascertainable actual basis, 20% of CFOB, whichever is lower. Now come to yes, what? Come to air route not ascertainable, 20% of CFOB. Insurance ascertainable 1.125%, not ascertainable 1.125%, ascertainable actual basis. Good. Now special points. Exchange rate notified by CBIC, more than 1 rate, bill of entry date CBIC rate. Accessories spare parts supplied compulsory along with main implements chargeable at same duty. Ship demurrage, light raise, bargage added to CFOB and become CIF. In case of delay, not to be added. Yes, Indian port to Indian factory not be included. Freights are of 3 types: foreign port to foreign factory to foreign port FOB. Foreign port to Indian port. CIF, Indian port to Indian factory, not includable. Buying commission, not includable. Agent commission, includable. Buying commission does not represent agent commission. Okay. Next. On assessable value, what will we read? Basic customs duty. How to determine basic customs duty? Bill of entry, entry inwards, date, whichever is later. That date rate considered as exchange rate. Basic customs duty. On basic customs duty, what will we read? Social welfare surcharge, 10% fixed. Assessable value, basic customs duty, social welfare surcharge. Togetherly, subtotals are on that IGST. If you add total imported cost, computation of total customs duty plus IGST is equal to basic customs duty, social welfare surcharge, IGST, or total imported cost minus assessable value. We'll cover the balance problems. Morning we completed a problem with a presentation. Now we'll see some other problem with presentation. Illustration number 4. Compute the total duty and integrated tax payable under the customs law on import equipment based on the following information. Based on what, sir? Following information. Now, assessable value of imported equipment. Assessable value of imported equipment. How much it is? $10,100. Bill of entry 25th April. Basic customs duty 10%. CBIC exchange rate 85. $1 is equal to 85. Entry inwards 21st April. Bill of entry, entry inwards. Whichever is later for basic customs duty. Now what is the basic customs duty, sir? Whichever is later, 21st April, 25th April. Then what is the basic customs duty? 10%. Now, yes, CBIC, 2 CBIC is given. What to be considered? Bill of entry CBIC, $1 is equal to, that's it. Now integrated tax, 18%. Social welfare surcharge, 10%. Solve it, very easy. Assessable value, $10,100. On that what, sir? BCD, 10%. Yes, on that what, sir? Social welfare surcharge, 101 point. 101 only now. 1010 into 10%, sir. The same. Now what it is, sir? Subtotal. What it is? What is the subtotal? Hmm? 11,211. On that IGST 18%. On subtotal, calculate. 2,000. Okay, what is the duties? BCD, social welfare surcharge, IGST. Now, BCD, social welfare surcharge, IGST, that is equal to how much, sir? Huh? This is what? Dollars. Convert into rupees, 85. Decimals, not a problem. Decimals it is. It's done. Now, illustration number 5. Apply your brains, sir. Apply your brains. RPG Limited imported 125 units of minerals from high seas. High seas. What rule applicable? Now, rule number 1. Rule number 2. Rule number 3. Transaction value. Rule number 4. Identical goods. Rule number 5, similar goods. Rule number 6, declaration of value. If value not determined as per 3, 4, 5, 6 said, go to 7. If not, go to 8. 7, deductive value. If we imported from high seas is also international water outside India. 8, computed value, cost plus profit. 9, residual method or best judgment. 10, cost of goods and services. 11, declaration by importer. 12, rejection of declared value. 13, interpretative notes. Now high seas means you need to take deductive value. Yes, while in deductive value, others price, less freight and insurance. If many persons price is there, what to be considered? Highest quantity price. Highest quantity price. Now the sale quantity, this is what? Sale quantity. This is the unit price. Now how many unit prices are there, sir? First, how many? 90, 95, wait, 90, 95, 100, 105. Yes or no, sir? All are this only. 105, 95, 90, 100, 95, 90, 100, 105. 4 are there. Now you need to calculate with 90 what is there, sir? 90, what is the sale quantity? 60. Next, 70. Now tell me the units. 130. With 95, sir? With 95, sir? Only 50. With 100? With 100? 100? Only 100. With 105? 80? 30? How much it is? 120. What is the highest units? 130. Then what is that price? Now we need to take a unit price of highest. What it is? 90 rupees. Highest quantity price. Highest quantity is what, sir? 130 units. That 130 units price is 90. Now basic customs duty 12%. Assume no IGST. You required to calculate total customs duty as per rule 7. This is the inter problem. Now 130 units price is 90. Then consider it as 90. Now assessable value, you need to say our way. Assessable value, how many units are we imported? Where it is given? Yeah, 125 units. You say 125 into 90. How much, sir? Huh? Less what, sir? Less what, sir? Insurance. What is the freight amount? 2,530. Insurance? 310. Now you say 8,000. This is what, sir? Our assessable value. Our assessable value. Now add BCD. How much? 12%. Now $8,410 into 12%, sir. 1,000? 1,000? Okay, that's enough. Social welfare surcharge 10%, that is 101. Now no IGST. Now what is the duty, sir? 1,009 plus 101, 1,010, 1110. That's it. You got the value. Any doubts? This is your inter problem. Morning we solve the final problem. Now illustration number 6. From the under mentioned related to the import made on 12/10/2024 of the product Minic from New York, USA to the Kochi airport by Mr. Prahlad, the importer. Okay. They given a use your brains. What they given? Which means import through? Array, they given airport. Again you are saying ship means what, man? Total gone. Zero. Now FOB value of product. They given cost of transport. Cost of transport, which means what cost it is? Freight in, freight in, freight in, CIF hero. FOB already included na, then it is CIF. This is also CIF. Unloading charges, not loading. Unloading charges. Yes, basic customs duty, IGST, exchange rate by RBI, exchange rate by CBIC. Now you say what to be considered as exchange value? Okay, solve the problem very easy. FOB $10,000 plus anything is there? No, FOB is equal to CFOB. Yes or no, sir? If nothing is there, FOB is equal to CFOB. Then add freight, insurance. Freight, air freight should not exceed 20% of CFOB, which means actual basis or 20% of CFOB. Actual basis is how much, sir? Actual basis 20% is 2000. Now consider it as 2000. Insurance 1000. All are dollars. Whenever you require, you can convert. Now it is what, sir? Now it is what, sir? CIF is equal to assessable value. What it is? 13,000. Now convert into rupees. 84. What it is? What it is? Rupees. Assessable value rupees. Now on that add basic customs duty. How much? 10%. Remove 1 0, man, enough. Social welfare surcharge 10%. Remove another 0. Now what is the subtotal? What is the subtotal? 12 lakhs? Okay. IGST. 18%. You say? On subtotal only. Calculate. 180? 182, can I take? Okay. Now what is the taxes, sir? BCD, social welfare surcharge, IGST. Total it. Total customs duty and IGST is equal to how much? 3 lakh? Perfect. Next, compute the assessable value of mission imported from Germany by RLI Limited under the Customs Act. Also determine the duty liability of RLI Limited. Okay, FOB value. Yes, air freight. If air given, be cautious. Insurance cost. Designing charges in India not known, leave it. Insurance not known. Design charges in India not to be added. Indian agent commission added. Buying commission is different, agent commission is different. Transportation charges from Indian port to Indian factory not included. Rate of duty, and which means basic customs duty, that is BCD, 10%. IGST 18%. Exchange rate, only one exchange rate is there. Then CBI is, it is mistake ma, it is CBIC. Earlier it is Central Board of Excise and Customs. Now your book problem. Some mistakes will be there. Now can we solve it? Now FOB $30,000. Add agent commission. Only one agent commission. Agent commission. How much? Rupees. Then convert this also into rupees. 30,000 into 85. Okay. Agent commission 20,000. What it is? What it is? CFOB. How much means you need to calculate. CFOB 25 lakhs. Now on that what required? Freight insurance. Air, they given air, be cautious. Air, what you need to take? 20% of CFOB. Yes, 25 lakhs 70,000 into 20%. 5 lakhs 14,000 or actual amount into 85. How much? Now whichever is lower. Now what to be considered? That's it. Now insurance not known. Take 1.125%. How much it is? Is there any mistake, man? How much it is? This one is a mistake. 7250 into 85. 6 lakhs? 60. 16. 6 lakhs 16,000. Okay, leave it. Now, insurance 25 lakhs 70,000 into 1.125%. 28,912. What it is, sir? CIF. CIF or assessable value. You say? How much it is? $31 lakhs? 9? 1, 2. Okay. On that we need to calculate BCD. How much? 10%. 0.2 not required. Leave. Social welfare surcharge. 10% on BCD. Okay. Now subtotal. How much? Subtotal. $34 lakhs? Okay, on that IGST 18% into 18%. Now, what is the total duties? BCD, social welfare surcharge, IGST. Total customs duty and IGST is equal to how much? 9 lakhs? Calculate once again. Every person should do. $9 lakhs? What happened? FOB 30,000. Insurance okay. Air freight 20%. CFOB 20 means that is 6,000. What happened? Oh, this one mistake, ma. This one mistake. Agent commission we need to take on CFOB. They taken on FOB. This is mistake. Why? Because agent commission should be taken while counting CFOB, na? But they taken later. There's a mistake. There's a mistake. I was correct. Your book problem, na? Sometimes make it correct like this. Or at least you can write there is a mistake. What mistake, sir? All done correct. Agent commission to be added to FOB, then you need to count on CFOB, na? If nothing is there, FOB is equal to CFOB. But agent commission to be added. Okay, sir? Now, 8th, 9th, 10th. Out of these 3, we'll solve one problem with presentation. Which one we'll solve with presentation? We'll write in the notes. Not like this. Tomorrow you write an exam based on that presentation. Up to you. 8, 9, 10. Sir, select of your choice. 9, 1. Okay. Now 8 we will solve as usual. After that we will go for 9. Okay, listen. Informatics Limited imported a photography printer by air from Best Ink of USA as per the following details. Now, CIF value $4,500, air freight. Yes, you need to solve this. Insurance cost, rate of exchange, interbank rate, basic customs duty, IGST. For exchange, what to be considered? Bank rate or CBIC rate? Okay, this is not required for us. Okay, now we want real CFOB, perfect CFOB. Then you need to solve back end. Already we solved this type of problem. CIF 4,005, less freight, less insurance, 1,250. Now, what is CFOB, sir? Then add our freight. What is our freight, sir? 3250 into 3250 into 20%. How much? Original 1,000. Whichever is lower. Which one is lower, sir? Now take 650. Insurance, take as it is. Now this is the perfect and corrected CAF or assessable value. How much? Now on that BCD 10%. How much? 415. Social welfare surcharge 10%, 41.5. Subtotal 4,000. It's a dollar, na? Tell me in points. 4,006 not? Okay. Then IGST. 18%. Okay. Now BCD, social welfare surcharge, IGST, which means 415 plus 41.5 plus 829.17. 1000 into 84.5, that is rupees. 1 lakh. Yeah, 1 rupee decimals. Give me your material, man. So take the book. Take a rough paper at least. Practice the presentation. First we'll see, then we'll solve. R Limited imported a machine from England. It given the following particulars. Price of the machine 8,000 UK pounds. Freight air 2,500 pounds. Design development charges in UK to be added or not to be added? To be added. Commission payable to local agent. Buying commission is not includable. Agent commission includable. Date of bill of entry 24th. Yes, arrival, which means entry inwards. Yes, whichever is later, sir. 24th October. Yes, then what is the basic customs duty? Bill of entry, entry inwards, whichever is later. Then basic customs duty is 10%. Now, yes, CBIC rate, bill of entry, entry inwards. Bill of entry, 2 CBIC is given. That's it. IGST 18%. Insurance charges not available. Take 1.125%. Yes or no, sir? Then we'll solve. Start the problem. First, computation of assessable value. Particulars, amount. First, price of the machine. Price of the machine. How much? 8,000 UK pounds. This is the pound symbol. Now next, what to be added, sir? Design development charges. Add. This is what, sir? Price of the machine. Price of the machine considered as FOB. Now add design development charges in UK. Design and development charges in UK. How much, sir? 500 pounds. Okay. Next, agent commission. How much? They said 2% in rupees. Now what we require to do? Convert these also into rupees, which means 8,500 into 100. 8 lakh. Good. Eight lakhs 50. Now agent commission 2%, which means 8,000 into 2% into 100. 8,000 into 2% into 100. How much? Yes. Okay. Next, is anything is there? No. Then this is what, sir? CFOB. CFOB or customs FOB or FOB value as per customs. Write at least customs FOB for a good presentation. How much, sir, it is? 8 lakhs 66,000. Then for CFOB, what to be added? Freight. Now write as note. Now note. Freight. Actual basis, freight, air. Actual basis, 20% of CFOB, whichever is lower. Now what is actual basis, sir? 2,500 into 100. How much it is? 2,50,000. Now 8,66,000 into how much? 1,73,000. Now whichever is lower. Now take 1,73,200. Now insurance. If not given, 1.125% of CFOB. Which means 8,66,000 into 1.125%. 9,742. What it is? What it is? CIF or assessable value. You calculate, sir? $10,48,000. Very good. This is what? CIF or assessable value. Then computation of customs duty and integrated tax payable. First, particulars amount into rupees. Assessable value is equal to assessable value. How much, sir, assessable value? 10,48,942. Add BCD. How much BCD? 10%. Plus social welfare surcharge. 10% on what? Basic customs duty. This is what? Subtotal. Subtotal is what, sir? Assessable value, basic customs duty, social welfare surcharge. Calculate. Wait. I made a mistake, ma. I made a mistake. 10,04,894. Then 10,04,89.4. Now calculate. Okay. Plus IGST. 18%. How much? 2 lakhs? Now add this. What it is? Total imported cost. For practice, you say. How much, sir? 13 lakhs? Okay. Okay, now total customs duty and integrated tax payable is equal to BCD social welfare surcharge plus IGST. BCD social welfare surcharge, IGST. How much, sir, it is? Some other way is there, na? We'll solve that one also. Total imported cost minus then 13 lakhs 73,000 minus 10 lakhs 48,942. How much, sir? Check your answer. Yeah, two decimals, that is. So in this way you need to write. So by looking it is easy. See how much of big it is. Practice required, sir. Practice required. By seeing that, all will feel problem easy. When it comes to the exam, when you put pen on the paper, then real picture will starts. Presentation required like this, or else they won't give the marks. If you like, last exam you did write about capacity of parties in 3 lines. If you write like this, they won't do. If you want 7, presentation required. Don't give any chance to the examiner to deduct your mark. Done, sir? Now, last problem, but not least problem. Okay. ABC Industries Limited, ABC Industries Limited of Mumbai imported one mission through vessel from Japan. Vessel, no air, in the month of November. The following particulars are made available for computation of customs duty. Now, cost up to the port of exportation by the exporter, which means factory cost. Loading charges, freight charges from port of export to port of import in India. This is different, that is different, sir. This is where? CIF. Okay. Now, design charges in India, Delhi, India, not to be included. Commission paid, but not a buying commission, yes, to be added to CFOB. Landing charges are Wipro case. You need some tea or coffee sometimes. Actual insurance charges paid to the place of importation is not ascertainable. If not ascertainable, 1 point. Light rate charges to be added to CFOB to get CIF. If it is delay, not to be added. Basic custom duty given, social welfare surcharge, IGST, compensations is not required. Now exchange rate given only 1, take directly. Now we want first FOB. What is FOB, sir? These two considered as FOB. 6 lakhs. Japan yens, that is yen, sir. Japanese currency, yen. Okay. Then you need to add design charges not to be added, agent commission to be added. Okay, add agent commission. How much it is? Okay, this is also yens, 1 lakh. Okay, then this is what? CFOB, nothing is there. Nothing is there. CFOB. How much? Then on CFOB, we need to add freight, insurance, light race charges. Freight, 1 lakh, they given directly. Insurance, if not given, 1.125% of CFOB. 7,50,000 into 1.125%. 7,50,000 into 1.125%, sir. 8,000? 430? Okay. Now, light race charges directly they given 20,000. Total all are N's. Now, this is CIF for assessable value in N's. 8,78,000. Okay, convert into rupees. 0.71, sir. 6 lakhs. Okay, 691 we can take. Something done. We did correct only. Where is there is a mistake? Find the mistake. 6 lakhs. 6 lakhs 25. Okay. Then insurance they not taken. They taken na. FOB. They taken FOB. They need to take on CFOB na. Yeah, CFOB is only taken. What is our CFOB? How it comes? Okay. 7,50,000 into 0.71 calculate. Then we can understand where we did a mistake. 5 lakh? There is a mistake. 6,25,000. Okay. Agent commission is how much? 1,25,000 na? Where is taken? The agent commission is in rupees, man. They're not given, but they're taken in rupees. Both. Usually agent commission is in rupees only, most probably. Common explanation. Why? Because agent is in India, na? Local. Yeah. That is a mistake we did. So, in what way you need to do that now? Leave this. Convert into rupees. Convert into yens. 0.71. Four lakh. Then add 1,25,000. These two are rupees now. It's correct now? 750. Okay. Now this is CFOB. Now add freight. That ends only. Freight ends only. 1 lakh into 0.71. Directly you can take 71,000. Insurance. 5,68,750 into 1.125%. 5,68,750. 6,000. Then light race 20,000. Light race 20,000. This is rupees. They are not given. But light race to be paid in India. What is a light race? Yes, in the if the port there is no proper place or water level, they used to. That is in India, you need to consider in rupees. Then it is also 20,000. rupees. Now calculate. 6 lakhs. Is it correct now? Okay. Now 6 lakhs as 6 lakhs 66,000. Then basic customs duty 10%. Social welfare surcharge 10%. Leave that last digit, man. That is enough. No. This is, I need to take this, calculate. 666. How can it comes, man? 666. Okay. Subtotal. Then IGST 18% on subtotal. 33,000. Okay. What is the total duty? Two lakh 6,000 37. Yeah, this is the decimals, not a problem. So we done with the valuation. Once valuation done, we have only one chapter left as a balance, which will take only 1 hour. After you completing third chapter, types of duty will be completed even below 1 hour. If you try second chapter once, it will take 5 hours. After third chapter, if you see second chapter, 1 hour. Yes, after first chapter, if you go for second chapter, 5 hours. Follow my order. First, third, second. Any doubts, sir? Okay, wind up the class. For today, we'll meet tomorrow. Bye.